So welcome to day 3 of CMA final strategic financial management class. We have enjoyed a lot in the last 2 days. Understanding all the basics, whatever we have studied till now. We have not solved lot of comprehensive problems, or we have even not solved any problems from the study material. The first 2 days were fully focused on building a foundation to start this investment decision chapter. Now whatever we have studied in inter is as it is applicable in final also. So it is not that I am teaching the inter portion. Whatever is applicable in inter is as it is applicable in final, plus a lot of new concepts are also applicable in the final. So if I want to open your study material, and I hope everyone is having your study material with you. Please tell yes if you are having your study material with you, because today we will be using our study material to a very good extent. Okay, very good. So if you see the study material, currently we are in section A, investment decisions. And if you come to the study material, you have the first module, which is introduction, where nothing great is discussed. Something that we discussed yesterday, how to measure cash flows. Okay, how to measure cash flows. That is something that we already saw in the previous class. So sales less COGS, less depreciation is profit before tax, interest less taxes is PAT, and after PAT you have to add the depreciation to get the net cash inflow after taxes. This is something that we already saw here. So EBITDA minus depreciation is EBIT, minus interest is EBT, minus taxes is PAT, and if you add back the depreciation from the PAT, you will get cash flow after taxes. And I've also discussed what is the logic why we are adding the depreciation. So we are adding the depreciation, that is indirectly compensating the tax benefit on depreciation. So that is something that we have discussed in the last class. Why? Because depreciation is a non-cash expenditure. So now we are going to see investment decision. If you see your study material, there is no proper structure in which a problem is solved. So one problem is solved in one way, another problem is solved in another way, but we will design a structure so that any problem that comes to you in this chapter, you will be able to think in a very structural manner. So that is what is our way. What we are going to do is that we are going to systematically structure this chapter in such a way that any question that is come, if you have that thought process, if you have that structure in your mind, things becomes very simple. Okay, now let us come. I have already told you, out of all the techniques, usually you will be having a project decision. Okay, usually you will be having a project decision where you will decide whether to accept the project or reject the project. Now we cannot use non-discounting techniques called as payback period and accounting rate of return. Why? Because these techniques have a very important criticism or limitation, is that they don't use the concept of time value of money. And time value of money is very important because we are dealing with cash flows. Because we are dealing with cash flows, time value of money concept is very important. If we are not using the time value of money, which means that it is possible that we will be able to take wrong decisions. So that is the reason time value of money concept is very much important. Now when we saw time value of money, discounted payback period is also a discounting technique, but there you saw the limitation. After payback period, cash flows were not considered. So the most superior technique is NPV. The most superior technique is NPV. And you're having one project decision. So when you're having one project decision, the most superior technique is net present value. So when you have to accept if the NPV is positive, and when you have to reject if the NPV is negative. This is something that you already know. I'm just able to structure in a way so that it becomes easy for you to understand. Okay, sir. So I have to take a project decision. Now, project decision means either the project will be accepted or the project will be rejected. So when will the project be accepted? The project will be accepted if your NPV is positive, and the project will be rejected if your NPV is negative. Okay, sir. Now let us come to calculation of NPV. Calculation of NPV. To calculate the NPV, you know how to calculate NPV. NPV is nothing but discounted cash inflows minus discounted cash outflows, and discounted cash outflows is also called as initial cash flow. Okay, so discounted cash outflow means what is my outflow? Usually my outflow will be in the 0th year, and you know that 0th year discounting the present value is always 1. So that is the reason either it is called as initial cash flow or it is called as discounted cash outflow. So in your study material, initial cash flow will be written. In some books, discounted cash outflow will be written. But why I'm writing discounted cash outflow is that sometimes they will give a question like that. I want to purchase a machinery for 10 lakh rupees. Now, usually 10 lakh you have to spend in the 0th year, present value. So 0th year it will be minus 10 lakh rupees. But sometimes what they will tell is that, out of this 10 lakh rupees, 20% advance we will pay now, 80% we will pay after 1 year. So like that sometimes question comes. Now 20%, so 10 lakh, like 2 lakh I will pay now, and 8 lakh, okay, I got some credit period or credit offer. Like 80% you pay after using the machine after 1 year. Then what will happen? That 80 lakh rupees is an outflow in year 1. So that is also an outflow, but this is 0th year outflow and that is for first year outflow. So you cannot add both. Then what you have to do? You have to discount that outflow and then you have to minus. So that is the reason, for clarity purposes, for structure purposes, I'm telling you NPV is nothing but discounted cash inflows minus discounted cash outflows. Okay, so that is what. Now, if I'm talking about discounting always happen for cash flows. Okay, discounting always happen for cash flows. In any NPV problem, cash flows are bifurcated into 3. Okay, in any NPV problem, cash flows are bifurcated into 3. Sir, what are these? The first one is initial cash flow. The first one is initial cash flow. We will use the short form as ICF. Initial cash flow means usually year 0 cash flow. Okay, initial cash flow means usually year 0 cash flow. The second one is annual cash flows. Now, you see any investment for that purpose. The first is the initial cash flow. You will pay something. The second is that after investing, you will be getting some cash flows over the period of project. Let's say the project is for 5 years. So for 5 years, you will be getting some cash flows. If the project is for 10 years, for 10 years, you will be getting some cash flow. Okay, in that 10 years, you will be getting some cash flow. So that cash flow is called as annual cash flow. So every year you will be having some benefit, right? So that is called as annual cash flows. We will write it as ACF. So annual cash flow means year 1 to year N. Now N means the end year. It is also called as terminal year. Okay, it is also called as terminal year. Year N means the year when the project is getting ended. So for example, if the project is for 10 years, then 10th year is called as the terminal year, because in 10th year you will terminate the project. Correct? So that is what is annual cash flows. And the last one is terminal cash flows. terminal cash flows. Okay, we will write it as TCF. Terminal cash flows means in the end what is your cash flow? Sir, what will happen, sir, in the end? When you're terminating the project, the machinery scrap will be there that you will sell, correct? You have invested something in the working capital that you will receive back. Okay, so you will get some tax expense or tax benefit when you are selling the machinery, capital gains. So all these things will come in terminal cash flows. So terminal cash flow means at the end of the year, okay, at the end of the project, what is the cash flow because of terminating the project? So that is called as terminal cash flows. Now annual cash flows will usually be every year. Okay, every year you will be having some cash flows. Initial cash flow will only be in year 0. Okay, or sometimes, as I told you in that example, if you are having some credit period and all, then it can go up to year 1 also. Okay, sometimes the outflow is also in the middle of the year. And terminal cash flow means the cash flows towards the end. Okay, usually what will happen, initial cash flow will be an outflow. Usually, this is called as usually, not usually, actually always initial cash flow will be outflow. Annual cash flows will be inflow, correct? Every year I will be having some inflows. And terminal cash flows, mostly it is inflow, sometimes it could be outflow also, but I'm just writing whatever is mostly possible. Okay, in the 90% of the question, terminal cash flows will be inflow, because usually at the end what you will do, you will sell scrap and then you will get some money. So that getting some money, right, that is an inflow usually. So that is how it will look like. So these are the 3 types of cash flows. How many of you are understanding? Just say yes or no. Yes if you are understanding this. Super. I want response from everyone. Bare minimum expectation. Super. Very good, Pa. Okay. So these are the 3 types of cash flows that I will be having in any NPV problem. Now if I want to move ahead, how my format of NPV will be? Okay, how my format of NPV will be? My calculation of NPV. It will be year cash flows, present value factor, okay, at some rate. So this X is a discounting rate, okay, this X is a discounting rate, this X is a discounting rate, and then after present value factor, you will be multiplying the cash flow into discounting rate, and then you will get the discounted cash flows. Sir, year 0, it will be an initial cash flow, okay, mostly it will be negative. Year 1 to n, it will be annual cash flows, and year n it will be terminal cash flows. Okay, then you will be calculating this outflow, this will be inflow, this will be inflow, and net either you will have a positive NPV or you will have a negative NPV. Now based on the positive and negative NPV, you are going to take some decision. So that is how our format of calculation will be. You think in this manner, even practically in real life, if you take any project evaluation, okay, if you take any project evaluation, always the project will be having some cash flows, correct? Project means it will be having some cash flows. Now you have to bifurcate those cash flows into initial, annual and terminal cash flows. While reading the problem itself, you should be knowing what will come under initial cash flow, which means initially, while for the start, what could be the initial cash flows, then annual cash flows, and then the terminal cash flows. Okay. Now let us first see, okay, what could be coming in an initial cash flows, what could be coming in annual cash flows, and what could be coming in terminal cash flows in a project evaluation problem. Okay, so let me see project evaluation NPV. Just one moment. Yeah. Now if you see in a project evaluation problems, Project evaluation means what? A case study will be given, or practically, should I invest in this project or should I not? Either I want to open a textile industry, I want to open a liquor shop, I want to open this, I want to open that. Okay, wow. So whatever it is, what should I do? Correct. So that is called as project evaluation. I will evaluate the project, and based on that I will take a decision. I will calculate the NPV, and based on that I will take a decision. Should I accept or should I reject? So that is how is the project evaluation problem. Now let us come what should be there in initial cash flows. Okay. Now everyone should try to understand project evaluation means what? Investment. Okay, usually to start in any investment, let us say that there is a purchase of machinery. You want to purchase a machine, you want to purchase some land. Okay, so purchase of machinery or purchase of asset. To start of any project, in the start you have to invest something in the machinery, okay, or invest something in the machinery, or invest something for the land. So first will be purchase of machinery, or it could be any other asset also. Okay, it is machinery, it is vehicle, okay, whatever it is. If it is a transport business, it will be purchase of vehicle. So any case, first it will be purchase of machinery or any asset. Is it an inflow or outflow? Everyone tell it in the chat box. Purchase of machinery, is it an inflow or an outflow? Very good. So purchase of machinery is an outflow. So that's the reason what I will do. I will write it in the negative. Why? Because cash is going outside my pocket. So purchase of machinery is an outflow. Okay, sir, what else could become here? Next thing what could become here is that if I am purchasing, I will be also incurring some installation cost, correct? Okay, so installation and setup costs. Okay, installation and setup costs. Again, that will be negative. Okay, again that will be negative. Sir, what else could be there? Suppose if this is a government project, suppose if this is a government project, what will happen is that I will receive some subsidy also. Okay, I will receive some subsidy also. Now you have to check the question whether the subsidy you will receive now itself, or the subsidy will be received after fulfilling some conditions. So sometimes, you know what will happen, you be in operation for 2 years, then I will give you subsidy. Correct? Some government schemes will be like that, or some government schemes will be like you purchase the machinery and then we will give you. For example, when you're purchasing an electronic vehicle, okay, some EV vehicle and all, EV vehicle you are purchasing now, the government will give you a subsidy of 10%, 20%, right? So the cost is 2 lakh rupees now, the government will actually bear 20% or 30%, and that is the reason you will, the cost for you is 1,70,000. So if there is any subsidy like that, now you have to minus, okay, subsidy received. So that you have to add. Why? Because that is a benefit that I'm getting, that is an inflow that I'm getting. So if 10 lakh rupees is the cost of machinery and 2 lakh is the subsidy received, which means 8 lakh rupees is my net cost of machinery. Okay, so this is something that could happen here. So let me just see initial cash flows. Okay. So this is what is the initial cash flows. Next one. Okay. Now what else could be there in the initial cash flows? One more thing. When you are purchasing the asset, just by installing the machinery, will you be able to generate annual cash flows? No. What you have to do, after investment in asset, you also have to invest something in the working capital. For example, initial stock and all you have to purchase, right? Initial stock you have to purchase, you have to keep some money to pay salaries, wages, transportation, electricity, rent, all the administrative overheads and all are there, right? So some advance you should also always be having, okay, some 2 months worth of, or 3 months or 4 months based on our operating cycle, we should also be having some working capital amount with us. So that investment in working capital also you will invest in year 0 only. Correct? So investment in working capital. Okay, investment in working capital. Again, that is an outflow. Now, if you see, usually it will be outflow only. So this is how your initial cash flow will look like. Okay, this is how your initial cash flow will look like. Okay, sir. Now let us come to the next one, which is annual cash flows. Okay, next one. Annual cash flows. Mostly in the annual cash flows, okay, it will be what? It will start with what will happen every year when you're starting the business. You will be having the sales. Correct. From the sales, you will be incurring some cost of goods sold. Correct. All the cash expenditure and all you have to minus. So sales na cash received, COGS na cash gone. So COGS means the purchase cost, okay, or whatever is the cost. So sales minus COGS is actually gross profit. Okay. So here it is not an income statement. You just have to minus everything. Whatever is the expenditure that you did, okay, admin expenses, all over, okay. So admin and general overheads. So that also you have to minus. Okay, everything you have to minus. And once you minus, you don't minus depreciation now. So this is what is called as EBITDA. Or even if you're not writing EBITDA, what you have to do, you also have to minus depreciation. Sir, why we are minusing depreciation? Sir, it is not a cash outflow. I already told you. Depreciation is not directly affecting my cash flow, but depreciation is indirectly affecting my cash flow. So the way is to first include it, then calculate the taxes and then add back. Suppose depreciation is not there. So suppose tax is not there, then depreciation you should not include, because anyways minus and plus it is the same impact only. So minus depreciation you have to do. Now once you do minus depreciation, this is what is called as profit before taxes. This is what is called as profit before taxes. Sir, how to calculate depreciation? Again, how to calculate depreciation? If you see, usually depreciation should be done over the period of the life of the asset. Correct? So whatever is the cost that you're having right here, whatever the cost that you have incurred, right, this cost, which means what? The cost of asset. Cost of asset include the installation also. Sometimes what lot of people will do a mistake is that purchase of machinery you will do minus. Okay, purchase of machinery you will do minus, but you will not add the installation cost while calculating the depreciation. So depreciation means what? Cost of asset divided by life of asset. Okay, cost of asset divided by life of asset, or here it would be life of the project. Okay, either if life of asset is given, life of asset, or usually it is life of project. So this is what we call it as SLM depreciation. If nothing is given, always assume it is SLM depreciation. But if they are giving, okay, but if they are giving that, okay, if they are giving, so cost of asset plus installation cost, and in terminal cash flows, okay, in terminal cash flows, the question also tells that the salvage value is 1 lakh, the salvage value is 2 lakh, because starting itself you know, right, that this could be the salvage value. So what you have to do, you have to minus the salvage value. So cost of the asset minus the salvage value divided by the life of the project. Wait, I have to write it completely. So what I will write, cost of the asset minus the salvage value divided by the life of the asset. Okay, wow. So this is what is SLM depreciation. Sir, what if it is a WDV depreciation? If WDV depreciation, now always the rate will be given. So rate will be given, you have to create something called as depreciation schedule. So here the depreciation, so this is what is depreciation, and here the depreciation is whatever is the written down value, okay, whatever is the written down value into depreciation rate. Okay, wow. So whatever is the written down value into depreciation percentage, okay, into depreciation percentage. So that is how WDV is calculated, if WDV is there. So either it will be year 1 to n, or it will be 1, 2, 3, 4, 5, 6. If all the cash flows are same, then you will write 1 to n. because annuity cash flows itself you will calculate. But if the sales are different in all the years, then you have to put multiple columns for years. Okay, so profit before taxes, then after profit before taxes you have to reduce the taxes, so this is called as PAT. After PAT you have to add back the depreciation, very important because it is an adjustment item. Okay, this adding back the depreciation is an adjustment item, and once you add back the depreciation, this is what we call it as annual cash flows after taxes. Okay, this is what we call it as annual cash flows after taxes. Now this annual cash flows after taxes usually will be an inflow. Then after annual cash flows, the last one is terminal cash flows. Okay, the last one is terminal cash flows. So whatever is the salvage value, okay, so because now itself we are assuming, right, so whatever is the salvage value, because end of the terminal year, what I will get, I will get back my salvage value, so I will be having the salvage value as inflow. Okay, well, mostly this will be the terminal cash flows. But one more thing, when you are investing in the working capital, that most of the people will miss. When you are investing in the working capital, you will also recover the working capital in the terminal year. I will tell you this adjustment in a while, okay, but for now, okay, for a template purpose I am just writing it down, but I will explain you. So after the salvage value, what you have to do, you have to add back the, which is called as recovery, or I will not call it add, it is an inflow. So recovery of working capital, okay, or recovery of working capital. So this is what is the terminal cash flow. Whatever you are reducing here, correct? Whatever you are reducing here, that you are adding here. So this is also one adjustment. Okay, this is also one adjustment. Okay, now if you see, and in scrap value also one more adjustment is possible. Now I will explain all these three adjustments. Okay, so first one, second one, and then third one. Now the first adjustment is called as depreciation and tax adjustment, that you already know, correct? What is depreciation and tax adjustment? So whenever depreciation and tax both are given, first you have to reduce the tax and then you have to add back the tax. Now the second adjustment is recovery of working capital, okay, or working capital adjustment. Always in the working capital adjustment, investment in working capital is an outflow in initial cash flow, and a recovery of working capital is an inflow in terminal cash flow. Now, sir, why, sir? Why? Okay, now, what is happening here? Let us say here, in year 0, 1, 2, 3 and 4, let's say that it's a 4-year project, and let's say my investment in working capital is 10 lakhs. Okay, let's say an example, my investment in working capital is equal to 10 lakhs. Which means, what are you telling, sir? Your investment in working capital, I should put it in the terminal year as an outflow. Why? Because in the 0th year, you are spending 10 lakh rupees. Now understand what is working capital. Now what is the meaning here is that whatever you are investing in the 0th year, you will get back in the terminal year. That is one adjustment. But how you have to understand this? Okay, there is a logic behind that. I am very sure that a lot of people will not know this logic. Okay, so now what is happening? In the 0th year, you are investing 10 lakh rupees. So what is this 10 lakh rupees? You are having some stock, right? Initial stock of raw material. Then you will be having some money for wages, salaries, okay? Because in the 2 months time, you have to pay wages, salaries. So that amount you will keep it as, so that is called as working capital. So that is a safety amount. It is an investment that you have to make in 0th year. 50 lakh machine also you have to have, and 10 lakh rupees you have to have, out of which 3 lakh of stock and 7 lakh of cash you have to have, because next month you will pay wages, salaries, rent, okay, everything you will pay. So that amount is called as working capital. Now everyone understand. For now, let me just take an example. Working capital means stock, because it includes stock also, it includes debtors also, everything it includes. But let me first take an example of stock. Now let's say that in the 0th year you invested 10 lakh rupees in stock. When you will get back your 10 lakh rupees? The 10 lakh rupees you have invested in the 0th year, when you will get back the 10 lakh rupees? You will get back the 10 lakh rupees when you sell that stock. Correct? So stock, you will process the stock, again you will spend some money, wages, material, labor, and afterwards what will happen? You will sell that stock. So when you sell that stock, you will get the money back. Correct? So investment in working capital, and afterwards that working capital is converted into cash flow. So this cycle is called as operating cycle. This is something that we already discussed at the inter level. What is an operating cycle? Operating cycle means the time period, okay, the time period in which I am recovering my working capital. The time period in which I am recovering my working capital. So which means on an average, if in the 0th year I am spending for stock, and if my working capital is 6 months, which means after 6 months that working capital will be converted into cash. The stock will be converted into cash. Why? The raw material will be converted into WIP. WIP will be converted into finished goods. Then finished good I will keep in stock. Then one person will purchase, and then he will say, and then we will sell in credit. So now my stock is converted into debtors. Afterwards my debtors will be converted into cash. So after 6 months, let's say that raw material process item finished goods pandradhukku it will take 1 month. So 1 month it will take for the raw material to become finished goods. So 1 month gone. Then finished good is kept in godown for again 1 month, because as soon as I'm producing, people will not come and purchase. So it is kept in my godown. So that is again 2 months. Okay. So now 2 months gone, and in 2 months I have not received my money back. It is just in the finished good in the godown. Then one person will come and then he will purchase. So he is purchasing, and we are giving him a credit period of 3 months. Stock is gone outside, but money didn't come yet. So after 3 months only money I will get. So 2 months. So 1 month for conversion of raw material to finished goods. Then 1 month it was stock in finished goods, correct? A finished good holding period. So 2 months over, and then 3 months is the debtor collection period. So 3 plus 2, 5 months over. After 5 months only I am getting my money back. So 5 months is the working capital, correct? Sir, which means this 10 lakh rupees whatever we are investing, we are getting in 5 months, right? Appa, why are you telling that we are getting in 4th month? Okay, which means if you see when you are recovering, okay, wow, this 10 lakh, when are you recovering? You are recovering immediately after 5 months only. So now this is because this is an year. So what will happen? This 10 lakh will be recovered in the first year. Correct? 0th year, whatever you are investing, this 10 lakh you recover in the first year. Whatever is the stock that you are purchasing, after 6 months, 7 months, 8 months, you will get your money back. So I am just writing, for example, first year I got my money back. Correct? First year I got my money back. So that is the reason 0th year investing, first year only it is an inflow, right? Why are you writing as an inflow in the terminal cash flow is the question. Now answer my question. Once you got your money back, you will take the money home, no? You will again purchase stock, and you again repeat the same process. Are you understanding? You will again repeat the same process. It is not that, okay, sir, first initial I purchased for 10 lakh rupees and I sold it for 12 lakh rupees, okay, after doing all the further processing and all. So 12 lakh rupees I got, I will take my money home and go. Who will purchase another set of stock? So working capital is a repetitive process. It means when you're getting the money back, you're investing it again. You're getting the money back, you're investing it again. So working capital is like the fuel in the machine. Okay, it helps to keep the business running. So in the first year again you're investing 10 lakh rupees because the business is not closed. Whenever the business is running, it needs working capital. Understanding? Now this 10 lakh is again recovered here in the second year. Second year again you will invest 10 lakh rupees. Now this you will again recover back. Then third year again you will invest 10 lakh rupees. Fourth year you will get your money back. Now life of the project itself is fourth year. Fourth year end again you will purchase stock or no? Because project is ended. So which means what, this 10 lakh rupees you got back. Now if you see the net cash flow, 0th year it is 10 lakh outflow. First year no cash flow impact, no cash flow impact, no cash flow impact. And fourth year you are having an inflow of 10 lakh rupees, which is terminal year. That is the reason I am telling that 0th year the working capital is an investment outflow and the terminal year the working capital is an inflow. How many of you are understanding this? So please give me, if you're understanding what we have to do, my dear Chalakutis, this adjustment of working capital, how many of you are understanding? What should you do if you're understanding? Super. Yeah, I need virtual claps. Very good. So you guys are understanding. Very good. Super. Super. So this is what is the adjustment for working capital. Now, if you see your study material, they are writing change in working capital requirement. Actually, sir, why they are writing change in working capital? Sometimes what will happen is that, see, 0th year, I am just estimating that I will sell 10,000 units. So I will purchase only 10,000 of stock. Understand? I will purchase only 10,000 units for raw material. Raw material to produce 10,000 units. Now, as and when the business is growing, my estimation will also go high. And whenever my estimation is going high, I should also increase my raw material also. Let us say 0th year 10 lakh rupees only I want in working capital, 10 lakh of stock I want. First year also what 10 lakh of stock I want. But in the second year, understand, in the second year, let's say for an example, in the second year, so here just, okay, this is example 1. Now here what is happening, year 0, 1, 2, 3 and 4. This will be given investment. Sir, 0th year I need 10 lakh rupees investment, sir. Anna, because in 0th year I will need a working capital of 10 lakh rupees. But when my business is growing after 1 year, second year I will not need 10 lakh rupees. Second year actually I will need 20 lakh rupees. Because now my business capacity is increased. Now because my capacity is increased, my working capital now should be increased to 20 lakh rupees in second year. Correct. And in third year I need 25 lakh rupees of working capital. Now you see what will happen, recovery. Now recovery, this 10 lakh rupees will be recovered in the first year. And again, once you recovered, you will invest this 10 lakh rupees. Correct. Now again, this 10 lakh rupees you will recover. But now you will not invest 10 lakh, you will invest 20 lakh rupees. Now this 20 lakh you have recovered. But you are not reinvesting 20 lakh rupees, you are reinvesting 25 lakh rupees. Now this 25 lakh rupees you will get back. Now if you see your net cash flow, sir, 0th year I will need 10 lakh rupees. First year I will not need any extra. But in the second year, I will need additional working capital of 10 lakh rupees. Third year, I will need additional working capital of 5 lakh rupees. And whatever I have invested in the 3 years, I am recovering it back. Now, if you say 10 plus 10 plus C, 10 plus 20, 25. So, 0th year you invested 10 lakh rupees. Second year you have invested 10 lakh rupees. Third year you have invested 5 lakh rupees. So, if you see all these three, the total 25 lakh rupees, you are recovering it back in the terminal year. So that is what is the working capital adjustment. That is the reason the wording used is change in working capital requirement. Okay, so instead of working capital requirement, what they will tell is that change. Okay, or it is change in working capital. Okay, sometimes. So this rarely a question comes, but if a question comes, you should be knowing that how to handle this. Now, how many of you are understanding this? If you understand it logically, you know, any question it comes, things becomes very simple for you to solve. So this is the second example for adjustment. So that is the reason change in working capital. What is change in working capital means? Now how the question will be framed? In the initial stock of my initial stock of raw material will be 10 lakh rupees. But in the second year, I will need an additional 5 lakh rupees. So which means what? My second year working capital will be that. Now, how you have to understand is that without preparing this working note itself, you have to understand 0th year you're investing 10 lakh rupees, but in the second year you're investing additional 5 lakh rupees, right? That additional 5 lakh rupees, so 15 lakh rupees you have to recover back. So, terminal year, whatever you are invested in the working capital, you will recover back. Okay, so that is how it will be. Okay, that is how it will be. So, which means additional working capital. So, in the second example, additional working capital required further years. Okay. Additional working capital required in further years. So that is the reason, okay, that is the reason we call it as change in working capital, okay, change in working capital, or it is also called as cash flow for working capital. So 0th year it is an outflow of 10 lakh rupees. First year there is no change in working capital, so there is no investment also. Second year you are additionally putting one more 10 lakh rupees out of the pocket. Why? Because my business is growing, now I have to purchase more stock. So more stock I have to purchase, now more I have to invest in the working capital. So as and when the business is growing, your working capital will also increase. Or we can also say as and when your operating cycle is increasing, your working capital will also increase. In both the ways, your working capital can increase. Either your capacity is increasing or your working capital cycle or operating cycle is increasing. So what is the meaning of operating cycle? I already told you the time gap required the time gap from the date you are purchasing the raw material on an average till the date you are getting your money back. So that is what is the operating cycle of the company. Now let us say, for an example, if you see a tea business, what will be the operating cycle of a tea business? The tea business operating cycle will be 1 day or 2 days, correct? What is the raw material for tea? Milk, okay, milk, sugar, okay, everything, milk, sugar, and this tea patti and all. Now if you see milk, okay, if you see milk cannot be kept more than 1 day, correct? So daily you have to purchase the raw material. So your operating cycle is only 1 day for milk. Sugar you will keep a stock for 10 days, okay, and tea you will keep a stock for 10 days. So that is the reason your average working capital is only 2 days or 3 days, because their main raw material is milk. So which means whatever they're investing in milk today itself they have to sell, and today itself they will receive the money. Example, understanding. But suppose you are having a shoe shop, then what will happen? Today you are purchasing the shoe, today itself it will be sold or no? Today you are purchasing 100 shoes, now over the period of 6 months it will be sold. So your operating cycle on an average will be 3 months. Understanding? Correct. So this is how your operating cycle. So the lesser the operating cycle, the lesser investment is needed. Why? Because for a shoe business he should keep a stock for 6 months, correct? He should keep a stock of 6 months in his shop. So that is the reason 6 months worth of stock you have to keep, so more investment. But for a tea he will not keep 6 months worth of milk and all, so more investment is required. So less operating cycle, less investment, more operating cycle, more investment. Okay, these are just small concepts that I've studied in Inter, but I'm just practically telling you how to use those concepts in the advanced level topics. Clarity? How many of you are understanding this clarity? Just say yes, no, my dear Chalakutis. Super. Okay, so first adjustment was depreciation and tax adjustment. Whenever depreciation and tax both are given, okay, whenever depreciation and tax both are given, okay, first reduce depreciation, and then after taxes again add back depreciation. Okay, this is what is depreciation and tax adjustment. If tax is not given, don't do this because irrelevant. If tax is not given, first you will minusing, then you are adding, both are same only. Then second one is a working capital adjustment. Okay, second one is a working capital adjustment. And the third one, in this scrap value, what could happen? Third one, okay, the third adjustment is tax impact on sale of scrap. Okay, tax impact on sale of scrap. Now here understand, we could be having two cases. First, if the depreciation is SLM method. Second, if the depreciation is WDV method. Okay, wow. So let us first understand, if the depreciation is SLM method, usually the tax impact is 0. Okay, if the depreciation is SLM method, usually the tax impact is 0. So that is the reason whenever SLM is given, right? So most of the question is SLM. So that is the reason this adjustment itself will not come. But if your examiner is a sadist person like me, he will give WDV. So WDV is there. Now one more adjustment could come. That is called as tax impact on sale of scrap. Okay. So if the depreciation is WDV, then there is a tax impact adjustment. Okay. Then there is a tax impact adjustment. Okay. Don't worry. I will explain it why it is 0. Okay. Or why there is a tax impact adjustment. Now understand, when there is a sale of machinery. Okay. When there is a sale of machinery, capital gains will be applicable. Correct? Capital gain will be applicable. Understanding? Because whenever there is a sale of any asset, capital gain will be applicable. Sir, what is capital gain? Capital gain is a taxes. Okay, well, capital gain is a taxes. Capital gain taxes will be applicable. Actually, I have to write capital gain taxes will be applicable. Okay, super. Now, sir, how capital gain is calculated, sir? Capital gain is equal to what? The sale value of asset minus the book value of asset. Okay, minus the book value of asset. This is called as capital gain. Sir, what is capital gain tax? On the capital gain, you have to pay some tax. So capital gain tax is equal to capital gain into some tax rate. Okay, well, into some tax rate. So that is what is the capital gain tax. Okay. Let's say I'm having an example. We have purchased an asset for 10 lakh rupees. The salvage value of asset is equal to 2 lakh rupees and the life of asset is equal to 5 years. Now, okay, SLM. So what will happen? How to calculate depreciation? Depreciation is equal to 10 lakh minus 2 lakh divided by 5. Correct? I don't have to explain more about depreciation and all. Okay, this is something that you know from school time only. So 10 lakh is the value of the asset minus 2 lakh. What is depreciation? Depreciation is a systematic allocation of the asset in the P&L over the period of wear and tear. Correct? That is what is depreciation. Correct? So what is the answer? 8 lakh divided by 5 years, which means what? 1.6 lakh rupees is my depreciation. So when I'm purchasing the asset, 1.6 lakh every year I will knock it off in the P&L. Okay, that is what is depreciation. Okay, that is what is depreciation. Now, at the end of the 5th year, okay, at the end of the 5th year, what will happen? You will sell the asset. Okay, you will sell the asset. And how much you will get after sales? You will get 2 lakh rupees. Correct? If nothing is given, you always have to assume that the salvage value is the sale value. Okay, so because the salvage value is 2 lakh, so I am receiving 2 lakh rupees for the asset. Now, whenever there is a sale of asset, there is something called as capital gain. Sir, what is the formula for capital gain? Salvage value or sale value minus book value. Sir, what is my sale value? 2 lakh. Now, everyone understand what is my book value. Book value means, see, how much rupees is a book value means in the balance sheet, what is the asset value. So, what is my WDV value? Okay, it is also called WDV value. Now, if you see 10 lakh rupees I have purchased. Okay, now minus first year depreciation. How much is the first year depreciation? 1.6 lakhs. So this is the value at the end of the year 1. Okay, this is the value at the end of the year 1. 10 minus 1.6. It is how much? 8.4. Now minus second year depreciation. It is SLM method. So same depreciation. minus 1.6. So 8.4 minus 1.6 is 6.8. So year 2 it is 6.8. Okay, year 2 it is 6.8. Now minus third year depreciation. Okay, again how much depreciation? 1.6. So minus 1.6 if you do, you are having 5.2. Okay, so this is the year 3 value. At the end of the third year, the WDV asset is 5.2. Now year 4 depreciation, how much? Again minus 1.6. Okay, so minus 1.6 you will get 3.6. So this is the year 4 value. Okay, this is the year 4 value. Now again the fifth year depreciation is how much? 1.6. So what is the year 5 value? 3.6 minus 1.6, how much you are getting? 2. Which means at the end of the year, my book value of the asset is 2 lakh rupees. So here it is 2 lakh rupees. So there is no capital gain. Because there is no capital gain, there is no taxes. So basically, the depreciation is calculated in such a way that at the end of the year, the book value will be the salvage value. So which means what? The impact of the salvage value you have already given in the depreciation. That is the reason you are minusing it here mathematically. How many of you are understanding this part? Just say yes, no. How many of you are understanding? Everyone? Everyone? Are you all with me? Super. Sir, which means, now here what is happening here is that usually in the SLM method, the WDV is equal to the salvage value. Okay, because the depreciation is calculated in such a way that at the end of the year your salvage value is equal to your WDV. Correct? What is 10 lakh minus 2 divided by 5? Which means what? In the minus 2, so after reducing the 5 years, at the end you will have this 2 lakh rupees. So that is the reason you are reducing. Otherwise you will do 10 by 5, 2 lakh, 2 lakh, 2 lakh, 2 lakh. If you depreciate now, at the end of the year it will become 0. So why we are not depreciating 2 lakh rupees? Why 1.6 lakh rupees? Because at the end of the 5th year I am also having some salvage value. Correct? So that impact also I am giving over the years. Okay, that impact I am giving over the years. So that is the reason my capital gain will be 0. Now because my capital gain will be 0, my tax on scrap is also 0. Okay, my tax on scrap is also 0. Okay, so this will happen if there is a SLM method. Okay, this will happen if there is a SLM method. Okay, this will happen if this is a SLM method. Okay, sir. Now what will happen if we are having a WDV method? Now in the WDV method, mostly salvage value things and all. Okay, now let us say the purchase of asset is equal to 10 lakh rupees. Your sale value or salvage value is equal to 2 lakh rupees. Your life is equal to 5 years. Whenever WDV is there, always the depreciation rate will be given. Okay, you don't have to worry, depreciation rate will be given. Now they are giving depreciation rate. Now depreciation rate is equal to, let us say 20% is the, or plant and machinery, 15% is the depreciation rate. Income tax depreciation rate, because capital gain is an income tax concept, correct? So your income tax depreciation rate is 15%. These details will be given. Now what you have to do, whenever WDV is given, right, what you have to do, first you have to create a depreciation schedule. This is something that you have to remember, a structure I'm giving you. Sir, how to create depreciation? First opening. Okay, first you have to put opening value. Okay, then depreciation, and then closing value. Sir, what is my opening value, sir? 10 lakh. First year, how much is the depreciation? 10 lakh into 20%, which is how much? 2 lakh. So how much is my closing WDV? Or let me, instead of value, let me call it as WDV, the exact terminology. So opening WDV and then closing WDV, and I will write it as year. So year 1 opening is 10 lakh, depreciation is 2 lakh, and my closing WDV is 8 lakh. Okay, year 1, 2, 3, 5 years, right? Example 5 years. Now my opening for first year is 8 lakh. Now next year how much is the depreciation? 8 into 20%. So here 1.6 lakh rupees is the depreciation. Understanding? So minus 8 you do, you will get 6.4 lakhs. Now here 6.4 lakhs is the opening value. Now again into 20%, 1.28 lakh rupees is the depreciation. Now how much is my closing value? It is 5.12. Okay, it is 5.12 lakhs. Now again 5.12 lakh rupees is the opening balance. So into 20% you will do, you will get 1.02 lakhs. Okay, so 1.02 lakhs, if you minus it with 5.12, you will get 4.096. Okay, or I will also write it as, okay, 4.096 lakhs. 5.12 into 20% is 1.024. Okay, so now 4.096 lakhs, 4.096 lakhs into 20% is how much? 0.82 lakhs I'm putting. Okay, so 4.096 minus 0.82 is equal to 3.276 lakhs. Okay, 3.276 lakhs. Are you all with me? How many of you are understanding? Okay, really sorry, but depreciation is 15%, right? Let me change the question. Okay, 20%. Don't worry. Okay, my mistake. But since this is an example, right? So we can do anything we want. But in the examination, you should not do these things and all. Okay. For now, in my mind, it was if 20% I calculated. But in the examination, whatever is given, you have to put it. Okay. So depreciation, it is 20%. Okay. Now you see, what is my closing WDV? 3.276 lakhs. Now you all will be asking a question. You all will be having a question in your mind. Sir, why are we creating a depreciation schedule and all, sir? Directly we can calculate in the calculator only, na, sir. Correct. Directly we can calculate in the calculator. Correct. Because minus 20%. Sir, directly, sir. 10 minus 20%, 8. Again minus 20%, 6.4. Again minus 20%, 5.12. Again minus 20%, 4.076. Again minus 20%. Sir, 3.276, sir. You are getting that amount, right? Directly. Okay. Or 3.28. Okay. Everything. You are getting that amount, right? Why we are calculating a depreciation schedule? Understand. One, I don't want this value. I want this value, and I am calculating this also to know what is my depreciation every year, because this number you will use in your annual cash flows. Correct? This number you will use in your annual cash flows, and this number you will use in your terminal cash flows. Correct? Are you all now getting why are we creating a depreciation schedule? Say yes, no, everyone, my online students, Chelakutis. Okay, why now? Because I should also know what is my depreciation every year. Correct? Because this I will reduce in the annual cash flows every year. In my annual cash flows every year, this depreciation I will reduce, then I will minus tax, and then I will add back the depreciation again. Correct? So for that reason, I am creating a depreciation schedule. So that is how we will create a depreciation schedule. Sir, now the tax impact. Okay, now the tax impact. Sir, now what will happen? I have to calculate something called as capital gain taxes. Okay, I have to calculate something called as capital gain taxes. Okay, sir, now let me come here. What is my capital gain? You all know my capital gain is equal to salvage value minus book value. So how much is my salvage value, my dear Chelakuti? Is 2 lakhs. And how much is my book value? 3.276 lakh. Correct? Now everyone understand, 3.276 worth of asset. In a book value, in a WDV, the worth. In my book, the worth of the asset is 3.276. Now this 3.276 worth of asset is sold for 2 lakh rupees, which means, is it a capital gain or a capital loss? Is it a capital gain or a capital loss? It is a capital loss. Understanding? So which means I am having a loss on sale of machinery. It is also called as capital loss or loss on sale of machinery. How much is my loss? 1.276 lakhs rupees in my loss. Okay. Now, when I'm having a profit, I have to pay taxes. When I'm having a loss, I will get benefit of taxes. Now understand, sir, what's a loss means government will give me money or no, but I will get a tax benefit. See, understand how I'm getting a tax benefit. See, this 1.276 lakhs is a loss. So which means I'm having lot of asset in my block, right? So this 1.276 loss will be adjusted in some other asset, and in some other asset I will be getting a benefit of depreciation or benefit of taxes. So because that benefit is arrived because of here, so I will write not tax expense, I will write tax benefit. Okay, so next what I have to do, tax expense or tax benefit. Okay, or tax benefit. So here I am having a tax benefit of 1.276 lakh into, let us say my tax rate is 30%. Okay, so into 30%, so 1.276 into 30%, I am having a tax benefit of 0.38 lakhs. Okay, so this is what is called it as tax benefit of 0.38 lakhs. Now sir, why sir this tax benefit is important? Because in the terminal cash flows, the first cash inflow is the sale of machine. For what amount you are selling? 2 lakhs. And the second is, okay, add or minus, or I will just write, I will write plus or minus tax expense. Okay, or let me write it in this way, tax benefit or tax expense. Okay, tax benefit or tax expense. So here I am getting a sorry, so plus or minus. So here I am getting a tax benefit of 0.38 lakhs, because if it is positive, it is a benefit. If it is a loss, if it is an expense, it is a loss. So because it is a capital loss, I will get a tax benefit. So my terminal cash flow will be 2.38 lakhs. So which means that at the end of the year, one, I got 2 lakh rupees as an inflow because of sale, and the second one, I'm getting a benefit of 0.38 lakh in taxes. Okay, so that is the reason my terminal cash flow is 2.38 lakhs. How many of you are understanding this adjustment of tax benefit or tax expense? Okay, tax benefit or tax expense. Okay, super. Sir, which means what, sir? Okay, which means what? I could be having 3 cases. In the first case, your salvage value is more than your book value. In the second case, your salvage value will be less than your book value. In the third case, your salvage value is equal to your book value. Now, whenever your sale value is more and your book value is less, it means there is a capital gain. Correct? It means there is a capital gain, or it is also called as profit on sale of asset. Okay. Now sir, when my salvage value is less, so in this case my salvage value is less. Correct? In this case my salvage value is less than my book value. So if my salvage value is less than my book value, which means what? Which means there could be a capital loss. So capital loss means loss on sale of asset. Okay, here there is a no impact. Sir, when there is a capital gain, what will happen? If there is a gain, there will be tax expense. Because when you are having a gain, you have to pay taxes. So it is tax expense. When you are having capital loss, you will have tax benefit. When there is a capital loss, you will have tax benefit, correct, for outflow. Now if it is a tax expense, so tax expense is a cash outflow, correct, cash outflow negative, and tax benefit me is a cash inflow, so that's the reason it will be positive. You see here, your salvage value is less than book value, so therefore you are having a capital loss. So because it is a capital loss, you are having a tax benefit which is a plus, so plus na cash inflow which is a positive, correct. So if the salvage value is equal to book value, then there is a no tax impact, okay, there will be no tax impact, okay. So this is how my cash flow is derived, okay, how my cash flow is derived. There may be only 3 cases, so in all these 3 cases how to handle the adjustment is something given here, okay ma? How many of you are understanding, this entire discussion? If you're understanding, and what you have to do, my dear Chalakutis, super, create an environment of appreciation, okay, because that is very important as a student, also as a teacher. If from now itself, if we have this environment of appreciation, if we appreciate others work, if we appreciate others efforts, okay, it also becomes very understandable to understand the other person's perspective, because now you understand this, so that is the reason you are also understanding the other person's perspective. Appreciation is very much important. If you are not appreciating, you will also not understand the impact of the subject, okay. So that is the reason I always tell my students to be excited whenever we are learning anything. Excitement is the key, okay. Curiosity is the starting point of intelligence. Questioning is the starting point of intelligence. Now because we question a lot, that is the reason I'm giving all the cases. If you don't question, sir, what if salvage value is more, sir, what if salvage value is less, sir, what if salvage value is equal, because you are not having that question, okay. So slowly what I'm doing is that I'm igniting, what if this happens, then this will, if that happens, then this will happen, okay. So this is something that I'm discussing. See, in this much depth no faculty will explain. Let me tell you, there are very less faculty who explain concepts in this depth. I always believe that studying in a classroom is a very fun thing, okay. It's a very fun thing that you could be having, because we are discussing each and everything and your mind is continuously questioned. So that is the reason you guys should also enjoy. And I also appreciate if you could ask questions to me. If you are having some questions, you could ask some questions, be it a very stupid question also, it doesn't matter, okay, because it is always better to be stupid in the classroom than to be stupid in the examination hall, okay. You ask any question, because for me I always appreciate questions, okay. So this is how we have to have the tax impact, okay. So the third adjustment, okay, the tax impact on sale. Oh yo. Okay, so let me write it again. Tax impact on sale of scrap. Okay, I had to highlight this, okay. This is what is tax impact on sale of scrap, okay. I'll give you some time to digest this information, and I will also give you some time if you want to write note also, you can write it down. So read it. If you're writing your notes, read it once again, so that it will be digested in your brain, whatever you're studying. If we keep on going, it becomes very difficult for you to digest. Okay, SLM means no tax impact. Okay, why there is a no tax impact? Because salvage value will be equal to book value. When there will be tax impact? If salvage value is not equal to book value, because in WDV salvage value will not be equal to book value. Okay, read your note. If you're written your notes, read your note. But let me know in the comment, are you guys writing the notes also with together? Are you guys writing your notes? Say yes, no. Okay. Yeah, Malay, when you guys are using your phone, you could have taken screenshot and all, right? அப்படிதானே நீ பண்ற ஸ்கிரீன்ஷாட் தானே எடுத்துட்டு இருக்க. Otherwise, if it is a live class na, people will be saying sir மேலே sir sir கீழே sir. The smart way, you know, all these Zoom students and all, or recorded students and all, it's a smart way. We are going ahead, sir, we'll take a screenshot, but it is also a lazy way. I will tell you why. Because when you're taking a screenshot, you will not feel to write. Okay, afterwards I will write. Let me first concentrate in the class. Then at the end of the class, we'll be having 50 screenshots and you will not even feel to write. Correct? So again, that is also a loss for you. Because whatever you are doing, right, Adala I have experienced. Whenever I am seeing online note, I will just screenshot. At the end of the day, I will be having 50 screenshots. I will not even go back and watch that screenshots again. Writing is a different thing. So in the classroom itself, I'm giving you some time. So make sure, even recorded students also, don't think that I will write the note afterwards. Afterwards never comes. Write it now. Now is the time. Read your notes. Okay, this is means tax benefit or tax expense on profit or loss on sale of asset. Okay. Okay. So let us move ahead now. Okay, let us move ahead. So these are the three adjustments that could be there in a project evaluation problem. Okay, project evaluation problem. Now let us come to fourth adjustment. Okay, fourth adjustment. See, fourth adjustment is called as opportunity cost or opportunity benefit. Okay, opportunity cost or opportunity benefit. Okay, sir, what is this opportunity cost or what is this opportunity benefit? See, whenever you are evaluating any project, you should also see if there is any opportunity cost or if there is any opportunity benefit from the project or not. Now, for example, okay, for example, TT company. Okay, TT company. TT means super Tofik Tofil. TT company is planning to purchase machinery. Okay, for 50 lakh rupees. Okay, for 50 lakh rupees. It is not, okay, or company is not having space to install machinery. So the company is installing in a storage space where it was getting a rent of, let us say, 5 lakh rupees. Okay, the rent of 5 lakh rupees. The annual cash flow from projects are 15 lakh rupees. Okay, the annual projects are 50 lakh rupees. Investment in working capital required is 2 lakh rupees. Okay, salvage value is 10 lakh rupees. Life is, okay, let me keep the life as 4 years. Okay, just a simple question I'm writing, just a simple question. Actually, my point is only one, but I'm just creating a question for you to understand it. Now, let me always, okay, always for an answer, you have to bifurcate the into 5. First one, it is an initial cash flow. Sir, what will come under initial cash flow? Purchase of machinery. Purchase of machinery. How much is my purchase of machinery? Sir, my purchase of machinery is 50 lakhs. And one more thing, tax is equal to, okay, one more thing, tax is equal to 50%. Because when I'm writing depreciation, I should also write tax for that impact. If the question says ignore taxes, then depreciation also you don't have to calculate. Okay, understand this. Okay, now, sir, my purchase of machine is 50 lakh. Then what else? Everyone tell me what else will come in initial cash flow? One is purchase, sir, 0th year. Next, what will come in initial cash flow? Okay, 5 lakh per annum. Storage, how storage I'm spending something. What else will come in initial cash flow? See, you have to understand. When you're reading the question, you have to understand. You have to understand now. Now I am going to tell you a thing. How to read the question properly. Now see. First, let us read the question. Planning to purchase machinery for 50 lakh rupees. What is this 50 lakh rupees? Initial cash flow. It is not having space to install the machinery. Okay, 50 lakh rupees machinery I have purchased, but I am not having a space to install the machinery. Now understand, when I'm not having a space to then what I'm doing, I'm having some storage space, which means some warehouse I'm having, that is actually getting me a rent of 5 lakh rupees per annum. But now because I want to install this machinery, so what I'm doing, there itself I'm installing the machinery. So when I'm installing the machinery, then what will happen? This 5 lakh rupees per annum I will not get the rent. Correct? Some benefit I was getting every year. Now because of this project, I will not get that benefit. Are you all understanding? So because of this project, I am not getting this benefit, which means what? Indirectly I am spending one more 5 lakh rupees, because benefit lost is also a cost. So this is an opportunity cost. Okay, so this is an annual cash flow. An annual cash flows from project of 15 lakhs. So again, this is our annual cash flows. Investment in working capital required. Working capital will come in both initial cash flow and terminal cash flow. Okay, it will come in both. Then salvage value 10 lakh is a terminal cash flow, and life na depreciation. Okay, SLM depreciation is again an annual cash flow. So one initial cash flow, one more is actually investment in working capital. Okay, people are missing this. So investment in working capital. How much is my investment in working capital? 2 lakh rupees. So which means my initial cash flow is 52 lakhs. Okay, my initial cash flow is 52 lakhs. Now let me come to terminal cash flows. First one, how much is my annual cash flows? My annual cash flows is from this project every year how much I am getting? 15 lakh rupees. So every year I am getting 15 lakh rupees. Now everyone understand this. When I was not accepting this project, I was always getting a rent of 5 lakh rupees. 5 lakh rupees was the inflow. But now because I'm accepting this project, I have to forego the benefit of 5 lakh rupees. So now I will not get that 5 lakh rupees. Instead I'm getting only 15 lakh rupees. Correct? Instead I'm getting only 15 lakh rupees. So I am not getting this 5 lakh rupees. Correct? Had I received that 5 lakh rupees also, I would have received 20 lakh rupees. But why I am getting 5 lakh, 15 lakh rupees? Because I am foregoing 5 lakh rupees. I am foregoing 5 lakh rupees and I am receiving 15 lakh rupees. Understanding? Because every year I am getting 5 lakh rupees from the storage. But when I am installing the machinery, now I am getting 15 lakh rupees every year. Understanding? So I am foregoing the 5 lakh rupees to get 15 lakh rupees, which means my incremental benefit is only 10 lakh rupees. This is something that you have to understand. Sir, I will repeat it again. Every year I was receiving a rent of 5 lakh rupees. Now what I am doing, that is just a storage space. Now instead of now giving it on rent, I am using it for my own purpose by installing a machinery. Now when I am installing a machinery, every year I am getting 15 lakh rupees. So every year I am getting a 15 lakh rupees by foregoing 5 lakh rupees. So what is the net benefit from the project? The benefit from the project is only 10 lakh rupees. Because 5 lakh rupees anyways I was getting. Understanding? 5 lakh rupees anyways I was getting. Because of installing the machinery, the benefit extra I am getting is 10 lakh rupees. How many of you are understanding? Just say yes or no if you are understanding, so that I can move ahead. Just say yes, no. Or if you want to repeat again, you can always write tell repeat also. Okay, I will repeat it again. Say yes or repeat. Everyone understanding? Super. Which means, sir, the benefit from the project is 10 lakh rupees only, because 5 lakh rupees anyways I was getting. Correct? So 5 lakh rupees anyways I'm getting. Now I'm foregoing that 5 lakh rupees and getting 15 lakh rupees. So the net benefit from the project is 10 lakh rupees. But for project evaluation, I should only use incremental cash flows. Okay? This is very important. I should only use incremental cash flows. So now this is called as incremental cash flow. So annual cash flow, what I have to do? I have to minus the opportunity cost. I should minus the opportunity cost. And here my opportunity cost is 5 lakh rupees. So 10 lakh rupees is my annual cash flows. Okay, annual cash flows. Or it is also profit before depreciation. Okay, profit before depreciation. Because now I should also minus depreciation, right? Now I will minus depreciation. Now from here the things are very simple. So depreciation, how much is the depreciation? My depreciation is equal to 50 lakh minus 10 lakh divided by 4. So which means what? 40 divided by 4 is equal to how much? 10 lakh rupees. Okay, it is becoming 0. Let me keep my annual cash flows as 20. Okay, 0 now, there is no tax impact. So that's the reason. Just changing it to 20. Okay, don't worry. So I'm just changing this to 20 lakhs. Now my annual cash flows is 20. No problem. Okay, now annual cash flows is 20 lakh. So my profit before depreciation is 15 lakh minus depreciation 10 lakh. So what is my profit before tax? 5 lakhs, correct? Now minus tax. Tax is at the rate how much? 50%. So 2.5 lakh. So what is my PAT? My PAT is 2.5 lakh. Now I have to add back my depreciation. How much is my depreciation? 10 lakh rupees, and this is what is called as annual cash flows after taxes, which is 12.5 lakh rupees. So every year I'm getting a benefit of 12.5 lakh rupees because of this project, correct? Because 20 lakh rupees is the annual cash flows from the project, then minus 5 lakh rupees is the opportunity cost, so 15 lakh rupees. Now from this 15 lakh rupees, okay, from this 15 lakh rupees I should pay a taxes of 7.5 lakh rupees, correct? So 15 minus 7.5 is again 7.5 lakh rupees. Now on the depreciation I'm getting a tax benefit, correct? 10 lakh rupees is depreciation, 50% is the benefit, correct? So 5 lakh rupees is benefit that I'm getting. So 7.5 plus 5 is equal to 12.5. One more way of understanding. Getting it? Okay, because 20, then minus opportunity cost 15. 15, 50% tax gone, 7.5. Now from that 7.5 I have to add the tax benefit. Tax benefit is how much? Depreciation into tax. So 10 into 50% 5. So 7.5 plus 5 is equal to 12.5. That is logical way of thinking, and this is the numerical way of doing the problem. Okay, whatever be the case, your answer will be 12.5 lakhs. Now let us come to terminal cash flows. Now because it is SLM method, that scrap value adjustment will not come. The first terminal cash flow will be the salvage value. Okay, how much is the salvage value, my dear Chalakutis? My salvage value is 10 lakh rupees. And next one, you should not forget, okay, you should not forget, whenever working capital comes, your eyeballs should come out. You are seeing this Tom and Jerry and all, right? Whenever Tom sees Jerry, his eyeballs will come out. Okay, whenever you are seeing some adjustment like this, your eyeballs should come out. Okay, investment in working capital is there now. You have to focus it properly, because lot of people forget to add back the recovery. Okay, so recovery of working capital. Recovery of working capital. How much is the working capital? 2 lakhs. So here this becomes 12 lakh rupees of terminal cash flows. Okay, wow. So initial cash flow 52 lakh rupees and then terminal cash flow of 12 lakh rupees. So how to calculate NPV? Calculation of NPV is just a simple problem. Okay, just to explain the example for opportunity cost. Basically this is what is your opportunity cost. Basically this is what is your opportunity cost. Okay, for that, and also to consolidate all the points, I am just giving a small example. Now if you come to calculation of NPV, it is nothing but here cash flow present value factor. Let me just take the discounting rate as 20%, just for an example, and then discounted cash flow. Sir, year 0, okay, this is an initial cash flow. So year 0, what is my initial cash flow? 52 lakhs. Okay, it is 52 lakhs. Now annual cash flows. Annual cash flows means 1 to 4 years, correct? So for 1 to 4 years, what is my cash flow here? It is 12.5 lakhs. Either you can write 1, 2, 3, 4, but you know that annuity cash flow, you can do present value annuity factor also. Instead of multiplying with present value factor, you can also multiply it with present value annuity factors. I hope you all know this calculation of discounting and all. Annuity factor and all, you know how to calculate, right? Say yes or no. If it is known, I will explain it, no problem. annuity factor. Everyone. Next comes the terminal cash flow, which is 12 lakhs. Okay, which is 12 lakhs. Sir, 0th year, what is the present value factor? 1. So this becomes negative 52. Now, okay, see, for those who don't know what is an annuity factor, it is nothing but, okay, how you have to discount? Discounting is nothing but cash flow into present value factor at the rate 20%. It is nothing but discounted cash flow. Okay, it is nothing but discounted cash flow. Cash flow for the first year is equal to present value for year 1 is equal to discounted cash flow. Idhe mari cash flow for second year into present value factor at the rate 20% for second year. So this becomes your discounted cash flow for second year. Likewise, you do for all the 4 years and then you have to add back. This is one way of doing. Or else, because these cash flows are same, understand, because these cash flows are same, so what you can do, you can take cash flows are common. So present value factor at the rate 20% for first year, plus for second year, plus for third year, plus for fourth year is equal to discounted cash flows, correct? Or it is also called as discounted cash inflows for all the total. Now this value, right, this is what I call it as present value annuity factor at the rate 20% for 4 years. Two ways of calculating. One, a table will be given in your study material. In the last, okay, in the last, some table will be there, annuity cash flows kaga. If I go into the last page, I don't know whether it is there in your book or not. Let me just check. Okay. I don't know where it will be. If there is, there will be some table. But in the examination, you will not get the table and all. Okay, you will not get the table and all. So what you have to do? You have to calculate from the calculator. So cash flow into. Now, sir, what is the present value annuity factor? Everyone, you can take out your calculator. 1 divided by 1.2. That is what is the present value factor for this, correct? First year. So first year present value factor is 0.833. Correct? Then you have to press equal to. So this is the first year, year 1. Then year 2, 0.694. Then equal to 0.578. Sorry, 579. Last digit of the round of 3. Then equal to 0.482. This is for fourth year. So these are all the 4 years cash flow. What you have to do? You have to add the present value factors. Okay, you have to add the present value factors. So which means you don't do it in the long way. In the calculator, there is a trick. Once you press equal to 4 times, right? If there is a grand total button here in the calculator, if there is a GT button here, you have to press GT. But if there is no GT button here, there is one more way. 1 divided by 1.2 equal to 0.833 you are getting, right? Press M plus. Then equal to M plus, equal to M plus, equal to M plus. So all the 4 values you have added. Now you press MRC, you will get 2.5887. Okay, so this is what is the present value annuity factor. Because anyways, all the cash flows are same. Correct? So instead of multiplying individual cash flows into the present respective present value, you can take the cash flow as the common. And then if you multiply it with present value annuity factor, both will be same only mathematically. Are you understanding now? Present value annuity factor. My dear Chellakutis, understanding? Yes, no? Yes, okay. So what is the present value factor? 2.5887. Okay, but this is what is the present value annuity factor, which means all the 4 years you are discounting in shortcut. Now fourth year, so 1 divided by, so fourth year now what is 0.482? Okay, so 0.482. This is what is the fourth year discounting. Now you have to multiply. Okay, what? 12.5 into 2.5887. How much you are getting? 32.36. Now 12 into 0.482. How much you are getting? 5.784. Now please tell me how much is my NPV. My NPV is 32.36 plus 5.784 minus 52 lakhs, your NPV is negative 13.856. Now, since it is negative, you have to reject the proposal, or whatever is given in the question. Advice na, it is advisable to reject the proposal because the NPV is negative, like that one sentence you have to write. So since the NPV is negative, you have to reject the proposal, which means, sir, don't accept this project. Okay, don't accept this project. Okay, this is how. If I was not getting a rent and all, okay, if I was not losing a rent and all, na, probably it would be positive. Okay, because it would be 20, then I will add more, so probably it could be positive. Are you understanding this? So this is how you have to solve a problem. But through this problem, I have also explained you what is opportunity cost and opportunity benefit. Okay, just to consolidate the discussion. Okay, just to consolidate the discussion. Okay, opportunity cost and opportunity benefit. Benefit foregone, or let me write it in this way. Benefit foregone is an opportunity cost, and cost saved is an opportunity benefit. Okay, cost saved is equal to opportunity benefit. Up to how many decimals we have to take present value factor? See, usually I have already told you that it is always safer side to take 3 digits. Okay, every time safer side to take 3 digits. But if the values are in lakhs, now you have to take 4 digits. Here the lakhs I've done in this decimal. Okay, so there is no problem here. If you are putting full values in lakhs, you are putting the value, you take 4 digits. But safer side always you can take 3 digits. Okay, 3 digits is always safer side. Or most of the time in the examination itself, present value factors will be given. If you see your question papers and all, we will be seeing the question papers also. So there it will be there. Okay, so this is something that you have to understand. If some benefit you are foregoing, that is an opportunity cost, that you have to reduce it. And if some cost that you are saving, that is an opportunity benefit, that you have to add it. Sir, give me one example for opportunity benefit, sir. Now, let me say an example. Okay, let's say for an example, I am running a beauty parlor. Okay, let's say for an example, I am running a beauty parlor. First, I am having a shop. So first case, I am actually a shop owner where I am selling all the beauty products. Okay, where I am selling all the beauty products, and my current sale, okay, and my current sale is 10 lakh rupees per annum. Now, someone is telling you, hey, you have some extra space, right? Instead of selling the product, you can also open a beauty parlor. Okay, you just have to hire something. You have to invest 1 crore rupees. Okay, so you just invest 1 crore rupees. You invest 1 crore rupees and you open a beauty parlor. Okay, and you open a beauty parlor. From the beauty parlor business, every year you will get 20 lakh rupees per annum. So why are you earning 10 lakh rupees? From the beauty parlor, you can earn 20 lakh rupees. The investment is only 10 crore rupees. Now you see what is happening here is that normally when I am using, okay, normally when I am just selling the product, my sale is 10 lakh. But when you're opening a beauty parlor, people will come you, okay, that this sale is already having, because you're also selling product also. That outlet is there already outside. People will come, the people will purchase this thing. But inside, if you come, there is also a beauty parlor. Now the beauty parlor customers and all, they will sell. For example, if you do a hair dye, they will tell, if you're dyeing now, you take this shampoo. Understanding? Correct. This is all a business. Okay. So if you're taking this now, you take this shampoo. If you're using this skin, okay, so now only I did this manicure or pedicure, you take this soap, only then it will be good skin. Okay. or if you're using some chemical here or there, okay, you have to use this, you have to use that, okay. So like that and all, they will sell the products. Now because of opening a beauty parlor, this 10 lakh rupees sales they were already getting, but because of this beauty parlor, okay, because of this beauty parlor, their sale is boosted. So this 10 lakh rupees, they are having an increase of one more 2 lakh rupees because of beauty parlor, because of beauty parlor, okay, because of beauty parlor. So this is called as a benefit, okay, this is called as a benefit. One more example I'm telling you, okay, previously what was happening, to get the customers, okay, to get the customers to buy their product, they have to do a lot of advertisement for new products. They have to do a lot of advertisement because people are not coming, so they have to do a lot of advertisement to sell. Their advertisement cost, okay, their advertisement cost is equal to 5 lakh rupees. But now, because they have opened a beauty parlor, customer are directly coming to them, so they are pitching to the customers directly only. They don't have to advertise, correct? Beauty parlor is already customers are getting here, so they are already doing, so they are savings. Now they don't have to do any advertising cost. So savings in cost is an opportunity benefit. So this 5 lakh is also a benefit. Okay, what is the benefit? Savings in advertisement cost. Savings in advertisement cost of 5 lakh rupees. This is also a benefit. How many of you are understanding this? How many of you are understanding opportunity cost and opportunity benefit? Everyone getting a? See, boys and all will not know much things and all, okay? In a boys and all, very less they have gone to parlor, okay? Maximum they will go to salon, they will do a haircut for 100 rupees, okay? If you're having some beard or something and all, 150 rupees, okay? So 150 rupees for 100 rupees, and for this 50 rupees, 150 rupees is the maximum that you will spend in the salon, correct? Boys and all will relate. But when it is girls, okay, you are having a lot of things to do, okay? First you will do facial, cleanup, eyebrows, okay? You will have hairs in the face, lips, everything, okay? Everything you all will be doing, correct? Hand, cutting the nails, okay? Cutting the nails, which is they call it as manicure, cutting the nails of the leg, pedicure, this, that, okay? Everything. Your minimum, okay, your minimum spending will be say 1000 rupees or 2000 rupees when you go to beauty parlor. Not all girls, I am telling most of the girls. See, girls na mostly, okay, girls na mostly, people we feeling that they should look good, correct? They should always look good. So whenever they want to look good, first makeup spending high, second beauty parlor spending high. Yeah, all these are related to looks. Yeah, if you're going for a haircut also, you see boy haircut 100 rupees, girl haircut 500 rupees. Boy na full changing is there, transformation. Girl na no transformation, correct? Some 2 fingers they will cut, okay, for that 500 rupees. Because they know, okay, girl are very sensitive. You tell that, okay, you tell while cutting the hair, they will tell, see, we are having this new product. If you are putting this cream, okay, it is called upselling. Okay, we are putting this cream, then it will be great, but just 200 rupees more. You will be like, okay, apply. Okay, sir, your hand is very much, lot of dust is there. Okay, sorry ma'am, lot of dust is there. You just apply this cream, okay, just 200 rupees more, we will do it. Okay, so like that. One time, unfortunately, I went into a parlor. Okay, I went into a parlor. Unfortunately, because there was some function, I am against all these things, okay, this parlor and all, but from my family, they pushed me, no, you're a chartered accountant, you're a teacher, people are looking at you, you have to look good, this function, that function, you go to a parlor, one time you do, okay. I went into a parlor very recently, I'm telling, just 2 days ago. If you see my first class how my hair was, and if you see today how my hair is, you will see a difference, okay. My first day, my hairs and all were curly. So I went into a parlor, some good parlor, okay, it was a good parlor, luxury makeover parlor and all they were calling. So my family took me there. just okay va, just so that I look good. I am against all these things. I will not take care of myself. Okay, and I wait tola thangala. I said okay, let's see okay what happens. I went there and they said that okay, your hair are very curly and dry, you have to do some protein treatment in your hair. So protein treatment in the hair, the cost was 6,000 rupees per. Okay, 6,000 rupees. I said no, how will I spend? Okay, because I was not having a heart to spend 6,000 rupees on my hair and all, correct? Anyways, after some months and all, I will cut my hairs, so I don't want to do any protein treatment. Okay, okay, I will eat protein, okay, but I will not do treatment on the hairs. But okay, family, no, you have to do. Okay, 2.5 hours that person took. Okay, I don't know, in the name of protein, some jelly is applying, okay, and fire is doing, okay, and then that what we will call it a straightening, okay. He done all these things. My hair were like spikes, okay. Okay, now it is like good, okay. It is like becoming soft and all, but I don't know, okay. Some 6,000 rupees spending for that. Haircut 1,000 rupees. Afterwards, they said that you have to do facial, okay. 3,000 rupees for the facial, and then manicure and pedicure, okay. So something they will do pa, and our he is telling but there is lot of dust here. I said I have never seen any dust, okay. There is lot of dust, blackheads, whiteheads, I have never heard these words and all. The bill of that parlor was some 10 to 12,000 rupees was the bill of that parlor. And slowly I got to know there are a lot of girls coming there, and 10 to 12,000 rupees is their average spending monthly. He was like, what? 10 to 12,000 rupees, okay. Every month they will spend, okay. Every month they will spend in the parlor. Like that only people I have seen there. Only when you go there only you will experience, right? Angeda I have learned a lot of marketing tricks and all. I will tell you one more thing there. My hair cost was 6,000 rupees, okay. Once my hair was done, that person told me, see, this hair will last only for 2 months. But if you want to last it for 6 to 7 months, you have to use this shampoo, okay, some branded shampoo. You have to use that shampoo, okay. I thought, oh, sorry, okay, I will give you after the treatment. Once the treatment is done, he handed me the shampoo, okay, you have to purchase the shampoo, and from this shampoo, your hair will last for 6 to 7 months. I thought, sorry, okay, maximum how much a shampoo will be? 100, 200, 300, 400, correct? Hey, 500 pa, okay. Can you all guess how much was the cost of the shampoo? Guess panlama. It was 3,500 rupees pa. Okay, it was 3,500 rupees shampoo. He gave me two things, one shampoo and one mask, okay, some hair mask and all. I don't know what is hair mask and all. Two things he gave me, and the bill for those two things was 6,800 rupees, okay. Some 4,000 rupees shampoo and some 2,000 or 3,500 rupees that mask. 6,800 rupees was the cost of the two shampoo, okay. I was like, my hair treatment itself is 6,000 rupees and the product cost is 6,000 rupees. I said, this is a marketing trick. I didn't purchase the shampoo. Then he said, if you are not purchasing the shampoo, then you should not come to us, okay. Like your hairs are like this, like that, and all, your hair will go. I said, no problem, let this hair go. I will not purchase 7,000 rupees, okay, the 7,000 rupees products and all, okay. I will see some other shampoo, okay. You just want a sulfate free shampoo, correct? A sulfate free shampoo, I will use it something else, but I will not use this brand and all, okay. The higher the, the higher, okay, service or product they are earning, correct? Service they are not earning, in the product they are earning. I said some discount, no discount in the product, okay, no discount in the product. If someone is selling, follow Tarun sir's hairstyle, ayyo day. Tarun sir's hairstyle and all, some years it will more take. After some years, I will get that hairstyle. But I'm just maintaining. Actually, I'm putting a lot of chemicals now. Afterwards, it will become like this only. Lot of chemicals, if you put now, your hair will go. Okay, motte, it will go. But anyways, okay. My family and all were just like this. So that is the reason. So one advice, whenever you go to parlor and all, right, don't purchase the products and all. Instead you see for some alternative product and the product or formula பார்த்துக்கோ, and then that formula you see for some other thing, or you use herbal shampoos. Okay, I hope my family is not listening this. Okay, so a lot of things, all these were the example for opportunity, benefit and cost. Okay va? No more parlor after hearing this. Yes pa, okay va? You should get this instant you know, you will just get some instant gratification. Afterwards it is nothing. Let us see how much time this hair will last. I will update you ba. Okay, so benefit foregone and benefit saved is the fourth adjustment. Okay, that is the fourth adjustment that we discussed. Now once you know all these adjustments, right, once you know all these adjustments, you will be able to solve a normal project proposal problem. Okay, you will be able to solve a normal project proposal problem. So shall we take a breakfast break now? Shall we take a breakfast break? Currently what is the time? It is 9:05. Okay, everyone tell in the chat box, shall we take a breakfast break now, or you want to take 10 o'clock? Okay, we'll do one thing. The time is 9 o'clock. Okay, we will take a breakfast break. Okay, we will take a breakfast break now, and then we will meet again in exactly, okay, some 30 minutes. poduma 30 minutes is okay for you to complete the breakfast and come? Zoom students say yes, no. My dear chalakutis, okay, we will do one thing. Currently the time is 9:10 vanduchu. Okay, so 9:10, so we will meet exactly at 9:40. Okay, let us keep it as 9:45. Okay, so 9:45 we will come back, and then we will continue with our session. Okay, and then we will be solving problems, and also we will be discussing lot of concepts. Are you all enjoying? Are you all enjoying the topics whatever we have discussed today? Zoom students say yes, no. Enjoying, my dear chalakutis? Super, very good. Okay, very good. So okay, so with the same level of excitement, let us energize ourselves. Okay, and then after 30 minutes, so 9:45 exactly. Okay, 9:45 we will be starting our class. Okay, again. Okay, so let us meet again 9:45. Thank you very much. See you all soon after the breakfast. A very good morning, my dear students. So welcome to the second session of day 3 of CMA Final Strategic Financial Management. So please let me know in the comment box if my voice is loud and clear and if it is audible. I hope you all had your breakfast, had your tummy full. Also, I hope that you guys are not sleepy, my dear chalakutis. Hope you all are excited, alive. Very good. Okay, so shall we start? Okay. So in the last session we were discussing how a project evaluation problem will be. Okay, so project evaluation problem, how it will be, we have discussed what are all the adjustments which are possible in the question. So that is a project evaluation problem. So project decision or project evaluation problem, accept or reject. How we will take a decision of accept or reject? From the positive NPV or negative NPV. Okay, so from the basis of a positive or a negative NPV, we are going to base. So how to calculate the NPV? What are the steps in calculating? Okay, all these structure I have discussed. So the structure is like this. So what and all will come in initial cash flow, what and all will come in annual cash flows, what and all will come in terminal cash flows. Now all these cash flows, where and all adjustments is there. So we have discussed 4 adjustments. The first one is the tax and the depreciation impact. Second one is the working capital adjustment. Okay, the third one is tax impact on sale of scrap. Okay, sale, the tax impact because of profit or loss on sale of scrap of assets. And then the fourth adjustment is opportunity cost or opportunity benefit to find out the incremental cash flows, because end of the day we have to calculate the incremental cash flows. So for that we have discussed 4, and I've also did a sample problem for you to know how the questions will come in the examination. Okay, now the problem that we have discussed was on project evaluation problem. Now there is also a second type of problem. This is also project evaluation, but it is on a separate technique, okay, which is, and these problems are called as, or these decisions are called as replacement decisions. Now understand, the concept is same, but here the adjustments are more. I will just tell you, in replacement decision you are doing 2 things. One, you are purchasing the new machine. So purchasing a new machine, everything will come in. But also what you are doing is that you are selling the old machinery also. So replacing decision means replacing the old machinery with a new machinery. Okay, wow. So basically replacement decision means replacing old machinery with new machinery. So here 2 things will happen. First, sale of old machinery, and the second, purchase of new machinery. Now we all know whenever sale happen, the tax adjustment on scrap sale will come. So here tax adjustment in scrap sale will come in initial cash flow only, and also in the terminal cash flow. Because in the initial cash flow the tax adjustment will be for old machinery, and in the terminal cash flow the tax adjustment will be for the new machinery. Okay, so here how the problems will be. Okay, let us see here how the problems will be. Sir, initial cash flow, first what will happen? First, sale of old machinery. Correct. Now in the initial itself there is an inflow. So old machinery, okay, or some scrap value we will sell. Okay, so let us say that we are selling for, sir, 5 lakh rupees. So we will get that 5 lakh rupees. Next, what I have to do, whenever sale is there, always your eyeball should come out. Okay, well, so whenever sale is there, your eyeball should come out, and then you have to see that, okay, now because there is a sale, so which means there is also possibility that there is a capital gain. Okay, well, so next what you have to do, tax benefit. Okay, well, so plus or minus tax benefit or expense on sale of old machinery. Okay, wow. So either it can be a tax benefit or it could be a tax expense. Clarity. So now sale is done, so which means you have received an inflow. Now because of sale there could be some tax benefit or tax expense, so that's inflow or outflow you have to consider. Okay, so this is the net scrap value that you're getting. Now there could be some removal cost also. Okay, so that is also an outflow, because when you're selling there could be some removal costs, and the machine remove pandradhukku. Okay, so you will be having some cost, so that could be an outflow. And what, okay, that could be an outflow. Next, purchase of new machinery. That is an outflow. Now installation of the new machinery. Installation of new machinery, again that is an outflow. So now you have to understand, because now you are seeing what is the incremental investment, correct? You are not seeing the investment in new machinery, you are seeing what is the incremental investment in new machinery by selling the old machinery. That is the reason it is called as replacement decision problems. Okay, it is replacement decision problems. So installation of new machinery. Okay, Now, sir, purchase of new machinery, installation of new machinery, what else could be there? Now, when I was using the old machinery, my capacity was only 10,000 units. So my working capital investment was 10 lakh rupees. But now, because when I'm replacing the machinery, what is happening? My capacity is increasing. So that is the reason my working capital is also increased. So I have to put increase in working capital investments. Here only we have to put incremental cash flows. Okay. So now increase, correct? So that is an outflow. So basically always this will be an outflow only, because purchase will always be costly, right? And scrap will not be more. So this cannot be positive. Mostly it will be negative only. So this is the initial cash flow. These are all the things that will come in initial cash flows. Clarity. Next one. Annual cash flows. Very important. Okay, annual cash flows very important. Now, sir, when I was using, so now which means what? Which means what? Old machinery you sold for 10 lakh rupees, new machinery, let us say you purchased for 50 lakh rupees. Sir, 40 lakh rupees additional investment you made. Now on the 40 lakh additional investment, what is the additional benefit that I'm getting? Correct. Now, the sale of new machinery could be 30 lakh rupees, but the sale of old machinery was 10 lakh rupees. So my incremental benefit is actually 20 lakh rupees. Okay, wow. So what I have to put? Increase in sales. Correct. That is what is my benefit. I should not put sale from the new machinery. I should put increase in sales. Why? Because already old machine sales I was getting only. So because of the new investment, what is the sale that I'm getting? So here also you have put incremental investment. So here also you have to put incremental cash flows. Okay, well, here this was incremental investment, right? Incremental investment. So here this is sorry. Here this is incremental cash flows. Okay, so the first one is increase in sales. Next, so because I'm purchasing new machinery, sir, previously I was not needing a machine operator, but now I need some 2 or 3 machine operators also. So increase in cost. Because of this new machinery, my cost is also increasing. So increase in cost is it an outflow or an inflow? It is an outflow. Now, sir, previously it was a manual machine, now it is an automatic machine. For manual machine, I was needing 50 labor, sir. Now that 50 labor, I need only 2 labor, sir, just for packing. Okay, so 48 labors, my cost is saved. So cost saved means it is a benefit or a cost? It is a benefit, correct? So decrease in cost, it is an inflow. Okay, it is a benefit. So all the cost increase, cost decrease, and increase or decrease in sales impact we should get. So this is called as incremental profit before depreciation and tax. Okay, incremental profit before depreciation and tax. Now what I have to do? I have to reduce. I have to reduce what? Depreciation? No, incremental depreciation. Okay, I have to reduce incremental depreciation. Sir, why, sir? Incremental depreciation means what? The old depreciation minus the new depreciation. Sir, in the old machinery, I was getting every year depreciation of 2 lakh. Now, new machinery, I am getting a depreciation of 5 lakh rupees. So, 3 lakh rupees extra depreciation benefit I will get. Correct? I only have to put incremental cash flows, because everywhere I am doing an incremental analysis. So, incremental depreciation means what? Old depreciation minus new depreciation. Okay, so incremental depreciation. So now this is called as incremental profit before taxes. Then you have to put minus taxes, because anyways this is same only. Okay, anyways incremental taxes or minus taxes, because on this incremental profit only you are calculating taxes. So multiplying will get the same thing only. Okay, incremental taxes. Here you should not put old tax minus new tax and all, because already this is incremental cash flow. So on this incremental profit, what is the extra tax that I will pay? So that is what is incremental taxes. So this is called as incremental PAT. Now from here you have to add back this incremental depreciation. and this is called as incremental cash flow after taxes. Okay, incremental cash flow after taxes. Okay, from 1 to 10 years, or from 1 to n years. So this is how your problem in replacement decision will be. Now let us come to the terminal cash flows. Okay, now let us come to the terminal cash flows. Sir, now what will happen, sir? Sale of new machinery, first thing. Correct, the salvage value of new machinery will come here. Now whenever you are selling, your eyeball should come out, so which means plus or minus, correct, plus or minus tax on sale of new machinery. Now either it could be tax benefit or it could be tax expense also, correct. Next one, what we have to do, next one we have to add back, sorry, recovery of working capital, correct, recovery of that incremental working capital. Okay, my dear students, let me know if my voice is audible. Okay, so because you are putting here incremental increase in working capital, so I will put a recovery of incremental working capital. So this will also be like an inflow. Clarity? So sale of new machinery. Now here, one thing you have to understand here, okay, one thing you have to understand here is that this, okay, very less adjustment, okay, very less time this adjustment is asked, but this is also one of the adjustment. Sir, had I using my old machinery till the end of the life, I would have gotten a scrap value of 1 lakh rupees. Had I using the old machinery till the end of the life, because now I am not using till the end of the life. Let's say my old machinery or life is 6 years. So now after 3 years, I am purchasing a new machinery which is having a life of 3 years. Only then I can compare, okay, otherwise I cannot compare the old machinery with the new machinery. Now only, okay, first, now I have an option. What is the option? Option 1, use old for remaining 3 years. Remaining 3 years. Or option 2, use new for 3 years. Now because this 3 years and 3 years is common, that is the reason only I am doing replacement decision. Otherwise I will not do replacement decision. Otherwise the problem will be unequal life problem. So replacement decision problem will come only if this is the case. Okay, this is the scenario. Now either I have to use the old machinery for remaining 3 years. Now had I been using the old machinery for remaining 3 years, I would have been getting some scrap value. Now because I am using the new machinery, I would have getting some other scrap value, correct? Now let us say my old machinery scrap value was 1 lakh rupees. My new machinery scrap value in the end of the life is actually old machinery scrap value is 1 lakh rupees and new machinery scrap value is 2 lakh rupees. So there is an increase in scrap value. Okay, but there is an increase in scrap value. Okay, increase in scrap value. Anyways, you have put this sale value of new machinery, but there is an opportunity cost, correct? That old machinery to scrap value I am not getting now because I am replacing. So that is my opportunity cost. Benefit foregone, correct? Scrap value is a benefit. Okay, scrap value is a benefit for me. So benefit foregone, or it is also called as opportunity cost. Okay, it is a very rare adjustment that could come. Opportunity cost means what? Scrap value of old machinery. Okay, wow. This is an opportunity cost. It's a rare adjustment. Okay, wow. It's a rare adjustment that could be coming in the examination. Okay, it's a very rare adjustment that could be coming in the examination. Okay, otherwise mostly this point is ignored, but I am just teaching you so that you should be knowing that okay, this is also one of the impact. Now you all will be having a question, sir, we are not even using old machinery, sir. then why that is an opportunity cost? See, had you using the old machinery, you would have gotten some 1 lakh rupees. But now, because you are not using the old machinery, you are losing that 1 lakh rupees. So that is the reason I am reducing opportunity cost. But sir, that sale of new machinery has come, right? That sale of new machinery has come. But from there, I have to adjust this amount also. Correct? Because anyways, I was getting this amount. Based on that only, I have calculated depreciation. So that also I have to reduce it here. How many of you are understanding this adjustment? Say yes or no. Or you want me to repeat it again? See, I will tell you one thing. Okay. So I will repeat it once again. I will tell you one thing. You always have to remember, replacement decision, we will calculate something called as incremental cash flows. We will calculate something called as incremental cash flows. Sir, what is the meaning of incremental cash flows? The meaning of incremental cash flows is that the cash flows occurring because of replacement decision. Because of replacement decision, what is happening? All these are incremental cash flows. If something which is not happening because of replacement, you should not include it in the cash flows. Okay, now, because I'm replacing, I'm selling the old machinery. Okay, because I'm replacing, I'm selling the old machinery. Because I'm replacing and selling the old machinery, I'm getting a tax benefit. Because I'm replacing, I'm having a removal cost. Because I'm replacing, I have to purchase a new machinery. Because I'm replacing, I have to install the new machinery. Because of replacement, my investment amount is increased. Okay, so incremental cash flows because of replacement. Because of replacement, my sale is increased. Otherwise, my sale will not increase. Suppose there is no impact in sale, I will put nothing here. And because of replacement, nothing is happening. Understanding this point? Because of replacement, something should happen. Now, because of replacement, sir, previously it is just a machine change, sir. Okay, it is just a machine change. So, which means because of replacement, my sale is increasing. Because of replacement, my cost is increasing, sir. I need 2 extra machine operators. Okay, all other costs are common. Sir, because of replacement, my cost is reducing. Correct. So, because of replacement, this is my incremental profit. Now, sir, because of replacement, my depreciation is increasing, sir. Correct. Because of replacement, I have to pay some taxes. And then I have to add the depreciation, and because of replacement, my cash flows is increased. Now come here, because I'm replacing, right? That is the reason my new machinery is sold. Otherwise, my old machinery would have been sold. That otherwise old machinery would have been sold, right? That is my opportunity cost. Correct. So that is the reason I am minusing it here. Or what you can say, that because I'm replacing, I am losing the scrap value on old machinery that I would have received in the 6th year. And this is happening because of replacement decision. Now, because I'm replacing, new machinery sale I'm getting, and because I'm replacing, old machinery sale I will not get. So, this is minus panada. That is what is the incremental cash flows. How many of you are understanding now? Say yes or no. How many of you are understanding? Or you want me to repeat it? Please, everyone respond. My dear Chalakutis. Super. Okay. And because I'm replacing, I will be having I will be recovering the working capital that I have invested. Okay, so these are all the cash flows. Okay, because of replacement decision, you have to think it in this way. If at all I want to give you an example, okay, for incremental cash flows, let us say when it was an old machinery, a person should not be very much trained. Now, because I am replacing, I have to incur some training expenses. So that also forms part of replacement decision. Okay, why I am spending this training? Because of replacement only I am spending, right? So that is the reason that also should come here. Okay, so because of replacement, whatever are the cash flows that I am having, correct, everything will come, and I only then in a total basis I have to take a decision. So this is what is an incremental approach, or there is a total approach. Put all the cash flows for old machinery, calculate the NPV. Put all the cash flows for new machinery, calculate the NPV, minus the NPV, which is called as wherever the NPV is more. Here that minus, you are doing it in the problem itself. Okay, so that is how we are doing here. Okay, so that is total approach, and this is incremental approach. Mostly we have to follow incremental approach only. That is what is the more logical way of understanding the replacement decision problem. Right? How many of you have understood replacement decision? Please respond. How many of you have understood the replacement decision? Most of the people think that it is very difficult, but now I know that you know that I know that you know that now it is not difficult. Clarity? Super. Okay. Now let us move ahead. Okay, let us move ahead. Now this was for replacement decision. Now there are few other small adjustments and all. Okay, now whenever I am estimating the cash flows, okay, always estimation of cash flows is one thing. Estimation of cash flows, and this is something that you are learning for the first time in the final. Whenever you are actually estimating the cash flows, basically what is a discounting rate? You already know, correct? The discounting rate means what is the expectation that the shareholders want. Basically that is what you studied in inter, right? So discounting rate is the expectation of the shareholder, or discounting rate is also known as KO. KO means what? The cost of overall cost of capital. Okay, so mostly discounting rate means the expectation, basically the expectation of the fund provider. Okay, whoever is providing the fund, their expectation other the discounting rate. So from the cash flow, so for example, if you are having some cash flows, now from this cash flows you will discount. If you're discounting means what actually you're doing, you're removing their expectations. Okay, you're removing their expectations, and then you're calculating something called as net present value. So over and above the expectation, if I'm getting something, now that is what is positive. Okay, so that is why I have to accept the project. Okay, that is where I have to accept the project. Are you understanding this? Okay, so when I'm discounting, only then I will get the NPV. So cash flows, okay, positive cash flows and negative cash flows. Okay, both you will discount, and then you will get something called as NPV. And if that NPV is positive, you are going to accept. If that NPV is negative, you are going to reject. So basically discounting means what? If 100 rupees is the cash flow, 10% if you're discounting 100 rupees will become 90 rupees. So basically what is the 10 rupees? The 10 rupees goes for the cost of the funds. Because what is the 10%? The 10% is, let's say example, debenture rate, cost of debentures. I have actually funded my project using debentures. So cost of the debentures is 10%. Okay, so when the cost of the debenture is 10%, which means that I am removing the 10% interest from that cash flows, and then over and above whatever is the net cash flows that I'm getting minus the investment, that is what is the net present value. This is one more way of understanding the net present value. Okay, so now what I'm doing, when you're estimating the cash flows, this discounting rate is actually called as real discounting rate. This discounting rate is actually called as real discounting rate. Okay, let me call it this as RDR. It is called as real discounting rate. Real discounting rate means their expectation is captured. Okay, real discounting rate means the expectation of capital providers. Basically there is one more discounting rate, okay, which is called as nominal discounting rate, which is actually called as NDR. Now here the expectation of the capital provider is captured. Okay, the expectation is captured, plus the inflation is also adjusted. Which means what, sir? Every year the value of money is decreasing, right? So that inflation is also adjusted, and that is called as nominal discounting rate. Okay, nominal discounting rate. Okay, sir, what are you trying to tell? Previously I told you, right, discounting rate includes inflation also, inflation and risk. Okay, so risk means what? The expectation, correct? Something my expectation. Okay, so that is what. So expectation of the capital provider, if it is having, it is called as a real discounting rate. Sir, this much is the expectation, sir. 10% is the debenture rate. So minimum 10% I have to earn, correct? Okay. Sir, but there is also inflation. So adjust inflation. Okay, so that discounting rate is becoming nominal discounting rate. Sir, about which discounting rate we have to discount, sir? See, basically, if you are having real cash flows, then that is discounted using real discounting rate. But if you are having nominal cash flows, then that is discounted using nominal discounting rate. Sir, but till now what we were doing, sir? See, till now we were assuming that all cash flows are real only. Real means no inflation adjustment we are doing. Why? Because discounting rate is also real. Okay, no inflation adjustment is there in the discounting rate. But if at all, okay, if at all I want to know, okay, if at all I want to know what are my inflation adjusted numbers. So in the real cash flows, okay, in the real cash flows, if you actually discount the real cash flows with the inflation rate, you will get the nominal cash flows. Then from the nominal cash flows, if you discount using nominal discounting rate, you will get the present value. Okay, so present value is equal to real cash flows discounted using real discounting rate or nominal cash flows discounting using nominal discounting rate. Okay, so let me just give you a small example. So I will give you the example. Okay, let us take the example from here only, pa. Okay, let us take the example from here. Okay, and you all will know, okay, you all know what is real cash flow. Real cash flow means cash flow without inflation, and nominal cash flow means cash flow with the inflation. So basically, let us say, okay, let us say that I'm estimating, okay, let us say that I'm estimating, sir, let us say that I'm estimating, sir, first year I will get 10 lakh, second year I will get 20 lakh, third year I will get 30 lakh rupees. Now this is what is my expectation. Now what is happening, if at all I want to adjust inflation, okay, if at all I want to adjust inflation, the first year this 10 lakh is the value which is in real terms. So first year or the real terms, or this is not the inflation adjusted amount. Had I been project started today, so in the first year I would have gotten 10 lakh rupees. But now I want to know what is the inflation adjusted amount. So I will not get 10 lakh rupees, I will get 10 lakh plus 10%. Okay, well 11 lakh rupees is the inflation adjusted amount. Yeah, there is some inflation also. So I will get more amount, correct? This is the real. In real terms, I will get 10 lakh. But when I'm including the money value, so this becomes 11 lakh rupees. Okay, so basically, you just read this question. CSE supplies the following data to determine NPV of the project to be set up at Sonarpur, West Bengal. Your initial investment is 80 lakh rupees. Okay, initial investment is 80 lakh rupees. So basically what you have to do, actually basically this is nothing but the second problem. This is nothing but the second problem. Okay, this is nothing but the second problem. Real cash flow versus nominal cash flow. Okay, so now what you have to do here is that, sir, year, and then you are having real cash flows. So real cash flows, no inflation is adjusted. Now from the real cash flows, what you have to do, you have to adjust the inflation. Okay, you have to adjust the inflation. So basically you are adjusting the inflation, and then you will get nominal cash flows. Okay, you see, including inflation premium. So including inflation premium is this 12% is a nominal discounting rate. Yeah, it includes a premium of 10%. Okay, it includes the inflation premium of 10%. So now this is the nominal cash flow. So which means what I have to do? Present value factor at the rate 12%, because nominal cash flow should be discounted using nominal discounting rate. Had this been a real rate, then I should not do. Directly real cash flow I should discount. Okay, so present value factor, and this will be the discounted cash flow. Okay, sir, now 0th year. What is my cash inflow? Annual cash flow, economic life is 4 years. Okay, so 0, 1, 2, 3 and 4. Sir, how much is my real cash flow, sir? Annual cash flow from the project without inflation. So real cash flow. So real cash flow, nominal discounting rate. That is the reason I'm doing this adjustment. Okay, so 0th year, how much is my real cash flow? 30 lakhs. Sorry, this is an initial. Okay, 0th year means initial cash flow. So 0th year, what is my initial cash flow? 80 lakhs. Now this 1 to 4, directly I can write 1 to 4. No, because every year my amount is changing. So now I will put 30 lakhs, 30 lakhs, 30 lakhs, and then 30 lakhs. Sir, now 0th year, now what is the inflation impact? No. So my nominal cash flow is also 80 lakhs. No discounting rate. My discounting this is 80 lakhs. Okay, sir. Now what is happening here is that 30 lakh will become how much? Because I'm having an inflation premium of 10%, right? So my inflation is 10%. Okay, my inflation is 10% and my discounting rate is 12%. So which means what? Every year my amount will increase by 10%. Correct. So 30 lakhs. So this is nothing but 1.1 to the power 1, 1.1 to the power 2, 1.1 to the power 3 and 1.1 to the power 4. Okay, so you have to write this. Okay, so this is nothing but 1.21, 1.1, 1.21, 1.331. Correct. So like that you have to write the amount. Okay, so this is 1.1, this is 1.21. correct. Now 1.1 into 1.1 into 1.1, so is equal to 1.331 into 1.1 is equal to 1.4641. Now what I have to do? I have to multiply this. Okay, so 30 lakhs into 1.1. What is my nominal cash flow? 33 lakhs. Okay, my nominal cash flow is 33 lakhs. Now what is 33 lakhs plus 10%? It is 36 lakh 30,000. What is again plus 10%? It is 39 lakh 93,000. What is again plus 10%? It is 43 lakh 92,300. Okay, you see 43 lakh 92,300. Okay, so now what I have to do? Okay, so now okay, so I am not writing. Okay, I don't know how to write it neat and tidy. That you have to do. So 1 divided by 1.12, so 0.893. Okay, so 0.893. Again, if you do equal to 0.797. Again, if you do equal to 0.712. Again, if you do equal to, you will get 0.636. So now you have to multiply 0.893 multiplied by 33 lakhs. Okay, you will get 29 lakh 46,900. Okay, so this they are doing full amount. Okay, 4 digits they have taken, so that is the reason you are getting I've already told you if it is in lakhs, now you take 4 digits. Okay, so I have taken 3 digits. So let me take, okay, the same thing. 1 divided by 1.12 into 33 lakhs. Okay, so how much I'm getting? So they have taken 4 digits. Let me also take 4 digits. Just a moment. 1 divided by 1.12 equal to 8928. I have to write. Okay, 8928. Okay, so 8928. Then 7972. Then 7118. And then equal to 6355. Okay, va? 6355. So now you have to multiply 33 lakhs into 0.8928. How much are you getting? 29 lakh 46,240. Same thing, right? 29 lakh 46,570. Yeah. 8929 equal to 1.12. 8929. Sorry. Okay, va? 8929. Okay, these are all silly mistakes that we will make. Actually, I don't like even 1 digit problem also. So 0.8929 multiplied by 33 lakhs, 29 lakh 46,570. Okay, 570. Similarly, you have to calculate for all. Please calculate for all and tell me what is the NPV. Please calculate for all and tell me what is the NPV. Am I audible, my dear students? Okay. So please calculate the NPV. Okay. Please calculate everything and tell me what is the NPV. 3 lakh for 34 lakhs, huh? 34 lakh 73,930. Yeah. 34 lakh 73,930. I hope you guys are calculating and telling, huh? So 34 lakh 73,930. Okay, 34 lakh 73,930. So this is what is the NPV of the project. Okay, well, this is what is the NPV of the project. How many of you are understanding this problem? Please let me know how many of you are understanding this problem. Say yes, no. Okay. Now I will tell you one more trick here. Whenever a problem like this comes, okay, you already know that it could be solved in 2 ways. First, what we did, okay, real cash flow discounted using real discounting rate, and nominal cash flow discounted using nominal discounting rate. Real cash flow means what? Cash flows without inflation. So basically what are you doing here is that real cash flows into 1 plus inflation rate, correct? 1 plus inflation rate. So now this real cash flow will become nominal cash flow. So nominal cash flow is equal to real cash flow into 1 plus inflation rate. Now this is the nominal cash flow. This you will discount using a nominal discounting rate. Okay, this you will discount using a nominal discounting rate. So now what you will do, this real cash flow into, so this is becoming nominal discounting cash flow, correct? So present value is equal to nominal cash flow divided by 1 plus, okay, 1 plus, what you will do, 1 plus nominal discounting rate, okay, 1 plus nominal discounting rate, or present value is equal to real cash flow divided by 1 plus real discounting rate, correct? Both the things you can do. Sir, this you have calculated, okay, this you have calculated. Now I want to know how you can do in this method. So to calculate in this method, you should know what is the real discounting rate. You know what is the nominal discounting rate, okay? So this is what is the nominal discounting rate. Sir, what is the real discounting rate? You should not tell 2%. Sir, inflation is 10%, cost of capital is 12%. Sir, which means my real discounting rate is 2%. No, no, okay. See, you should be knowing one thing here is that here itself they will give, okay. Nominal discounting rate is equal to, here itself they will give, I think, where it is given, you see here, you see here, nominal discounting rate is equal to 1 plus real discounting rate, okay. You multiply that with 1 plus inflation rate, and then if you do -1, you will get your nominal discounting rate. Or you can also calculate the real discounting rate from here. So let me see from this question, okay. So from this question, what is your nominal discounting rate? 12%. So 12% na 0.12 is equal to 1 plus real discounting rate. I don't know. What is 1 plus inflation rate? 1.1. Correct. Inflation rate is 10%. And then -1. Okay. And then -1. Okay. And then -1. So first what I should do, this -1 will come here. So 1.12 is equal to 1.12 is equal to, now this 1.1 should be multiplied in both these cases, which is nothing but 1.1 plus 1.1 real discounting rate. Okay, 1.1 plus 1.1 real discounting rate. Now what I should be doing, I should be minusing this here, correct? So 1.1 real discounting rate is equal to 1.12 minus 1.1. Okay, this plus will become here minus. Okay, so now real discounting rate is equal to 1.12 minus 1.1 divided by 1.1. So 1.12 minus 1.1 divided by 1.1. What is the answer? The answer is 0.018, which is nothing but 1.818%. Okay, so your actually real discounting rate is 1.818%. Am I correct? I think I am correct. Okay, or you can also double check. Nominal discounting rate is equal to 1 plus real discounting rate, 1.1818 multiplied by 1.1 minus 1. So 1.1818 multiplied by 1.1 minus 1, if you do, oh my god, you are getting 100%. No, there is some mistake. Really sorry. Okay, just one moment. 12 is equal to, I think, it should not be 0.12, it should be 12 is equal to a nominal discounting rate. Nominal discounting rate is equal to 1 plus real discounting rate plus 1 plus inflation rate minus 1. Okay. So I know that my nominal discounting rate is 12% is equal to 1 plus real discounting rate into 1 plus 10% minus 1. 1 plus 10% is 0.1. So this plus 1 will become here, come here, right? Some silly mistake I've did, I think. 1.12 is equal to 1.1 plus 1.1 real discounting rate. So now 1.12 minus 1.1 is equal to 0.02 is equal to 1.1 RDR. So real discounting rate is equal to divided by 1.1 is equal to 0.018 is equal to 1.8%. Okay, so 1.818%. 1.818% is the real discounting rate. But this should match. Now I will calculate nominal discounting rate. So 1 plus 1.818% into 1 plus 10%, which is nothing but 1 point. A very good morning, my dear students. Let me know if my voice is audible, loud and clear. So apologies for the inconvenience. We were having some technical issues due to this new premise construction is happening here in Nagar, right? The audio is clear now. Please let me know if the audio is clear. Right? Yes. Okay. Okay, fine. Sure. So let us start. So we were discussing about nominal discounting rate and real discounting rate. So I told you there is a relationship between the nominal discounting rate and a real discounting rate. So how this relationship was? Using the nominal discounting rate, we have calculated real discounting rate, which is nothing but 1.1818%. Then I just checked by using this 1.1818%, am I getting 12% or not? So that check we were doing. So we did a small silly mistake, right? So 1.818%, if I do 1 plus 1.818%, it is 1.018. Instead, we have written 1.18. Okay, so that was a mistake that we did. Clear? So if you do and if you calculate in this way, 1 plus the real discounting rate into 1 plus inflation rate minus 1, if you do, you will get 12%. Are you all clear? Please put a yes if you are clear from here so that we can continue. Everyone? Okay. Now, sir, we have calculated this real discounting rate. The real cash flows, if we discount using real discounting rate, again I will get to the same NPV. Okay, ba? So let me just check. So what is the real cash flows? Okay, so these are my real cash flows. So let me just copy this. Okay, so I will copy this, I will come here and then I will paste it here. So this is my real cash flows. Now what I will do, I will do a present value. Okay, now what I will do, I will do a present value factor. At what rate? Because it is a real cash flow, right? So I will put it in the real rate at 1.818 percentage. Okay, at 1.818 percentage, and this will be the discounted cash flow. Okay, so this here it is 8, so this becomes 80 lakhs. Now again the same silly mistake you should not do. 1 divided by 1.01818. Okay, so this becomes 0.9821, then again equal to 0.9646, then again equal to 0.9474, and then equal to 0.9305. Okay, so 30 lakhs into, or I can even do present value annuity factor also. So let me do present value annuity factor. Okay, so present value annuity factor, 1 divided by 1.01818. Okay, sorry, 1 divided by 1.01818. So equal to m plus, equal to m plus, equal to m plus, equal to m plus. So 4 years, and I am getting 3.8246. Okay, 8246, multiply that by 30 lakhs. So 3.8246 into 30 lakhs. How much I am getting? I am getting 1 crore 14 lakh 73,800. And if I minus 80 lakhs, I am getting 34 lakh 73,800. Okay, wow. So if you see here, 34 lakh 73,930,800, it is all because of rounding off. Both the answers are same only. Okay, wow. So this is an alternative way of solving the problem, but usually you have to solve because this is what is easy. Okay, this is what is easy. But here, if at all, okay, if at all they are not giving you the nominal discounting rate, you have to calculate the real discounting rate, and then you have to do this problem in this way. Clarity? How many of you are understanding and have a 100% clarity of this concept of real cash flow versus nominal cash flow? So this cash flow is real cash flow versus nominal cash flows. Please respond. Real cash flow versus nominal cash flow. Clarity? Super. Now let us see mathematically how this is happening. Okay, see mathematically how this is happening. Nominal cash flow is nothing but real cash flow into 1 plus inflation rate, which means real cash flow is nothing but nominal cash flow divided by 1 plus inflation rate. Correct? So now, sir, now everyone see, nominal cash flow is nothing but real cash flow into 1 plus inflation rate, which means a real cash flow is equal to nominal cash flow divided by 1 plus inflation rate. Nominal cash flow should be discounted at nominal discounting rate. Real cash flow should be discounted at real discounting rate. Okay, so sir, if this nominal cash flow, so present value is nothing but nominal cash flow, discounting means divided by, okay, divided by 1 plus nominal discounting rate. Okay, 1 plus nominal discounting rate. This is what is my present value, or present value is equal to, or present value is equal to real cash flow divided by 1 plus real discounting rate. Clarity? Till now I am not doing anything, okay, anything great. I am not doing anything great now. Now see, sir, what is, and both will be same only. Sir, what is nominal cash flow? Nominal cash flow is nothing but real cash flow into 1 plus inflation rate divided by again 1 plus nominal discounting rate. Okay, 1 plus nominal discounting rate. Okay, now see what I am going to do, and real cash flow is same, real cash flow divided by 1 plus real discounting rate. Here I am not doing anything. Now both these are same. So what I am doing, this equation 1 and this equation 2 I am equating, because both are same only, right? 1 is equal to 2. Okay, 1 is equal to 2. I am equating both this equation. I can minus, I can plus, I can equate. So when I'm equating, I know that real cash flow into 1 plus inflation rate divided by 1 plus nominal discounting rate is equal to real cash flow divided by 1 plus real discounting rate. You all know that I can cancel real cash flow and real cash flow from here. Okay, I can cash flow, real cash flow and real cash flow from here. Now what I am doing here is that here this 1 plus real discounting rate I will bring here and 1 plus nominal rate I will bring here. So which means 1 plus, okay, this I will bring it in this side. 1 plus nominal discounting rate is equal to 1 plus inflation rate into 1 plus real discounting rate. So which means nominal discounting rate is equal to 1 plus inflation rate into 1 plus real discounting rate minus 1, and this is what is the formula that we have learned. Nominal discounting rate is equal to 1 plus real discounting rate into 1 plus inflation rate minus 1. How many of you are understanding the derivation of the formula? Please let me know how many of you are understanding this. Everyone, are you all getting this? See, this and all why I am telling, because I already told you, okay, no mugging up a formula. You should understand the formula. How many of you understood the formula? Please respond. My dear Chalakutis, I need some response from you all. Only few students are responding, others. Okay. See, even if you're not understanding, okay, this is nothing but, okay, this is nothing but just a derivation for you to show that how values are coming, correct? Because nominal cash flow should be discounted at nominal discounting rate, real cash flow should be discounted at real discounting rate. So present value is nominal cash flow discounted at nominal discounting rate, because divided by 1 plus NDR is nothing but discounted, and real cash flows is discounted at real discounting rate. So instead of nominal cash flow, I can also write real cash flow into 1 plus inflation rate. So both are same only, so I'm equating these both, so I'm getting this answer. Okay, basically you just have to remember this. Basically, if from a remembering perspective or from an application perspective, you should just know this nominal cash flow. So basically one more logic how to understand this. Nominal rate includes inflation rate and real rate. I already told, right? Nominal discounting rate means it also includes the inflation rate. So logically how you should understand is nominal rate is equal to 1 plus inflation rate and 1 plus real discounting rate. Multiply these both, okay, and minus 1. Okay, just for a remembrance perspective. How many of you are able to understand now? Please tell yes, yes, no. Everyone, I need response. Super. Super. Clarity. Okay. Sir, Apdina, you have to understand whenever you're reading question like this, right? You have to understand what is given. So see, cost of capital is nothing but discounting rate. Including inflation premium means it is nominal discounting rate. So that is the reason first, and this is a real cash flow. Without inflation cash flow means real, with inflation means nominal. So likewise you have to solve this problem, question number 2. Question number 1 we have already solved except IRR. Okay, except IRR we have solved everything. NPV also we know, discounted payback period also we know, and then payback period also we know. Except IRR we know everything. Okay, so this is question number 2 that we have solved. An alternative method you see from your book. Okay, you see from your book in the notes, you see from the notes that you have written. You should know which formula is used here. Okay, you should know which formula. So in the formula sheet you can write. I have given you some space for formula also. This is the workbook that we are planning to give, where the first 3 is section A, correct? The next 3 is section B, forex is section C, this is section D, and this is theory part. Okay, these 3 chapters are theory part. Any theory it will come from these 3 chapters only. Okay, or mostly 95% of the time, 5% they can ask from some other places, but 95% of the theory will come from here only. If you read only this theory, okay, 90% sure short questions will come from here only. Okay, from these 3, and I've given you in that notes also. You will receive your hard copy. See page number 120, right? So let me go to page number 120. See, we have given theory in such a way what are all the topics that are covered, and all the topics we have given the points. Okay, these diagram are taken from your study material. It was good, I just take it here. Okay, so we have just compiled with these are all. Now digital finance, what are all the topics that are covered, so which is what question could be asked, and then all the topic you are just having the explanation in a point wise and a table wise format. So digital finance, and the third one international financial management, 12 topics. So if you only study this much, okay, if you only study this much, 90% sure that theory question you can very easily handle. Okay, very easily you can handle the theory question. Okay, because it will come only from these 3 chapters. Now again come to page number 1. If you see, I have also given a trend analysis. I have also given a trend analysis of in all the attempts from June to from 3 attempts. Okay, it has been dispatched. Okay, books has been dispatched. It will reach you based on your location. Okay, if you are very near away, it will be reaching in 1 day, 2 day, 3 day, or you will receive the books in you can just wait for 2 or 3 days. You will get the hard copy of the book. Soft copy of first few chapters have already been shared to you, so that the class should not be disturbed. So if you see, we have also given the trend analysis in the question paper. In the question paper, for each question, first question is MCQ. Okay, first question is MCQ. So from 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, all these questions, what and all chapters are being asked. So if you see, always the question number 2A is investment decision. You can just see the trend analysis always for 7 marks. So you will get to know whatever we are studying right now, investment decision, the chapter 1, that will mostly be question number 2A, the first question. And then question number 2B is always leasing. You see, in past 3 attempts, it is full leasing only. Same way, if you see question number 3A, it is always evaluation of risky proposal. This is a trend analysis. So from here, you guys are intelligent enough. Okay, I'm just giving you guys are intelligent enough to predict, okay, how the next question will be. Even though I don't believe in predictions for question papers, but it is highly predictable, your paper. Security, 3B is mostly security valuation. You see, everywhere the question paper is very much predictable. Now here, your mind should ring a bell. If the questions are predictable, it means you can actually devise some strategies also. For example, you know that out of these 8 questions, okay, out of these 8 questions, 2 questions you can leave in choices. So 1, 2, 3, 4, 5. 5 questions you have to attend, 5 into 14 marks. Correct. 5 questions you have to attend. 5 into 14 marks is equal to 70 marks. and then MCQ is equal to 30 marks. So that comes to your 100 marks of paper. So 5 questions you have to attend. Now see here, even I'm just giving you an example. Even if you're studying only section A and section B, which means forex and financial derivatives, you're not even studying. Just an example. Okay, just an example. These 2 chapters, even if you're not even touching these 2 questions, you will not be able to attend. Still you will be able to attend 100 marks of paper. Understanding, one of my students just devised this strategy. I mean, one of my student just told, sir, I didn't even study derivative analysis, I didn't even study forex, sir, still I was able to attend 100 marks just because the paper was predictable. But yeah, I am not suggesting this and all. Why? Because anything could come in the paper. Okay, you should not predict. Tomorrow if something happened and if the institute shows you this now, you will be like, "Ayyo sir, I was predicting this. What if derivative comes here?" Okay, so it is not happening from past 3 attempts, which means it is predictable, but still there is no thumb rule that this will only come. Okay, there is no written agreement. It is just a implied thing. So one of the student who didn't study these 2 chapters still was able to attend full 100 marks of paper. So like that strategy and all you can do. In the classroom we will study everything. I'm just telling you for your future. Okay, I'm just telling you for your future. Using the trend analysis, you have to devise a strategy, because smart work is very important than hard work. Okay, for example, sir, I don't like this first, sir, investment, evaluation of risky and leasing. So if you're not studying now, this you will not be able to attend, and this 3A you will not be able to attend. But 3A you will not attend, 3B you will attend, it will be difficult. So these 2 questions you have to leave, and then you have to write everywhere here. Correct. So basically, or sir, theory I will not study, sir, I will not even study theory. Example, sir, I will not even study theory, which means, okay, these 3 chapters theory you will not attend. Okay, and sir, forex I will not study. Then you have to study all the other chapters. Just giving you, okay, just giving you some ideas. These are not my recommendation, just giving you my ideas. Okay, like based upon how your preparation level is based. So that is the reason I'm giving. This is an input which will not be useful now, which will be useful before the examination. Okay, or before the examination, just to devise some strategies. So I've given you some very interesting trend analysis. So this is a very interesting trend analysis that I've did it myself. Okay, taking all the past 3 MTPs and taking the past 3 question papers, I did this analysis. Okay, sir, why sir you have not taken past 10 attempts? See, why you have to go too far, 2000, and that will all old syllabus. Okay, so that is the reason I've taken the last 3 attempts. Then before every chapter in the workbook itself, I have given some 5 pages, okay, some 4 to 5 pages gap for you to write some formulas. So you can write your formulas here by yourself. Whenever you're studying, just write the formula. So before the examination, you're studying investment decision formulas and all will be here. So this will be helpful for you to summarize your, to summarize your the subject in a very concise manner. Then I've given you questions and I've given the space, you can solve it here itself, or if you want you can solve it in the notebook, there is no problem. Okay, but I've given you the space. Okay, in this space, if you want you can solve it here itself based on the handwriting. Okay, based on the handwriting, I've given some adequate space, but still if you find that it is difficult, you can always write it in the notes. In the end, I have also given some 4 or 5 pages free for notes, or you can attach something and then you can write it down. Okay, sometimes sometimes what I used to do, if the page is not sufficient I will write it in a blank paper and then I will staple it in my book, like that also, so that you will have a one resource material, and that one resource material is prepared by you. Everything is your book, okay, your customized thing, and then you will be referring to this book before the examination, so that becomes very much easy. Okay, so meticulously we have taken questions. We will not be solving only the questions from the workbook. If you see till now, only 2 questions have been solved from the workbook, but lot of questions we did in the classroom also. Correct. So this workbook questions are basically the selected questions from your study material, from your workbook which is given by the institute, and from the past year papers. Okay, from the past year papers the questions have been taken. lot of different sources we have used to take the questions. So selected question, one topic, one question. Likewise, I have taken. So real cash flow, nominal cash flow, one question. And also I have given you the topic. So before reading the question itself, you will get to know that what topic you're. This is just for your study purposes. Okay. Because in your examination, they will not give the topic. First, you have to read the question to understand what they are asking. So that skill you should get only by reading the question. I always say in my class that reading the question is more important than solving the question. Reading is very much important. If you're reading the question and if you understood the question properly, things becomes very simple for you. Okay. So this is how we are doing this. So if you see here again, this question is a real cash flow and a nominal cash flow problem. Huh? Wait, Zomato Limited, is it there? Actually, this is not a real cash flow versus nominal cash flow problem. This is unequal life problem. Okay, probably there is a typing mistake. You just cut this and you write unequal life. Okay, this is what is unequal life. Okay, this is unequal life problem. Okay, some typing mistake. Okay. Fine. So with this, we have completed this section also. Inflation adjusted cash flow. Okay, inflation adjusted cash flow. Now, capital rationing. Okay, again, capital rationing. I already told you that capital rationing means what? Investment decision. Okay, capital rationing. Capital. So we did replacement decision, we did project evaluation, and now we are at capital rationing decision. We did real cash flow versus nominal cash flow, and then capital rationing decisions. Capital rationing decision means selection of projects with a limited capital. This limited capital is called as bottleneck. Sir, what is the meaning of bottleneck? Bottleneck is something that determines your ultimate thing. For example, sir, from where this word came? Okay, if you see this bottle, there is a neck here. Okay, so this is called as bottleneck. Sir, how this concept is applying here? See, how quickly I can empty this bottle is dependent on the size of the bottleneck. If the bottleneck or the size is big, the bottle will empty in 2 seconds. If the bottleneck is small, it will take more time. The smaller the bottleneck, the more time it will take to complete. Now, okay, however the shape here it is more, here it is less. Okay, however the shape it is, ultimately it all depends on the bottleneck. Okay, ultimately it all depends on the bottleneck. So bottleneck is the lowest thing. Okay, bottleneck is the lowest thing. So that is what the concept applies here. For example, capital is a bottleneck. If there is no bottleneck, there is unlimited projects I can take. But because I am having a limited capital, so my capital becomes a bottleneck. Bottleneck means a restriction. So I will not be able to select all the projects. I have to select only restricted projects only. Okay, now here, if at all I want to take an example. Okay, if at all I want to take an example, let's say that I am having options. Projects A, B, C, D, E, F and G. And this is the investment. And this is the discounted cash inflows. So I can also calculate the NPV. Okay, I can also calculate the NPV. Then rank, profitability index, and then rank. Okay. Now, sir, project A, you need 100 lakh rupees to invest. Project B, you need 50 lakh to invest. Project C, you need 30 lakh to invest. Project D, you need 200 lakhs to invest. Project E, you need 300 lakhs to invest. Project F, you need 40 lakh to invest. Project G, you need 70 lakhs to invest. Okay, you need 70 lakhs to invest. Now, let us say your capital is only 500 rupees. Okay, you are having only 500 rupees. Now, sir, which project I should select? 500. Sir, you will tell D and E. Okay, you will tell D and E. Or I can also tell this 300, this A 400, and then this 70 and 30. Correct? Anything I can select. But I will not select it based on the, so any lot of options I'm having. Correct? Now, how I should option? Now, I should rank the projects. Sir, how I should rank? I am having some discounted cash inflows. 100 rupees investment I'm making now. My discounted cash inflows is 120. Here my discounted cash inflows is 80. Here it is 60. Here it is 240. Here it is 350. Here it is 60. And here it is, let us keep as 65. Now I know my discounted cash outflow. I know my discounted cash inflow. So now I can calculate the NPV. What is the NPV here? 20 lakhs. What is the NPV here? 30 lakhs. What is the NPV here? 30 lakhs. What is the NPV here? 40 lakhs. Here 50 lakhs. Here 20 lakhs. And here negative 5 lakhs. Okay, here it is negative 5 lakhs. So let me make this as 55. So this becomes, okay, 25 lakhs. And then let me make this as 110. So this becomes 10 lakhs. Okay. So now what you will tell, sir, wherever I'm getting more profit, that I will invest first. Correct? You will tell like this, sir, wherever I'm getting more profit, that I will invest first. Then you see here, sir, first I will invest in this, sir, I'm getting 50 rupees. So rank 1. Next rank 2. Next rank 3. Rank 4. Rank 5. Rank 6. Here no ranking. Loss now you will not even invest. So ranking itself you don't put. Understanding, you should not even put the ranking here. Now, if you select on the basis of NPV, first what you will select? First you will select E. Correct. Now selection. First you will select E. So investment. For E, how much you need? 300. Balance still 200 you are having. Next you will invest D. D, how much you are having? 200. How much is the NPV? For E, the NPV is 50. For D, the NPV is 40. So you will get the NPV of 90 for an investment of 500. Okay, for an investment of 500. This will be your selection. Okay, this will be your selection. But what I am telling is that this selection is wrong. Yeah, you can actually earn more NPV if you have selected it properly. You have not selected, okay, you have not selected the profitable projects. You have just selected for using the absolute values. Now, which means in capital rationing, what you have to do, you have to calculate the profitability index. So what is the formula for profitability index? Discounted cash inflow divided by discounted cash outflow, right? So 110 divided by 100 is how much? 1.1. Okay. 80 divided by 50 is how much? 1.6. Okay, discounted cash inflow 55 divided by 30 is how much? 1.83. Okay, discounted cash inflow 240 divided by 200 is how much? 1.2. 350 divided by 300 is how much? 1.17. 60 divided by 40 is how much? 1.5. This don't even do because it is less than 1. Okay, so one thing is that loss, negative NPV should be ignored in capital rationing problems. Okay, in capital rationing problems, negative NPV should be ignored. Okay, now what I am telling is that you have to do the ranking based on profitability index. So which is more profitable? This is rank 1, correct? Next this 1.6, next this 1.5, then 1.2, then 1.17, then this 6th rank. Okay, then this comes the 6th rank. Now what I am telling here is that you have to select. Okay, now see the selection criteria that I am making. Selection, investment and NPV. Sir, first I will select C, sir. Okay, and highest ranking C. If you are investing in C, how much you want? You want 30. So 30 invested. Now next what you will select? B. Sir, next B I will select. B how much you put? You put 50. Third rank. Next what you will select? Next I will select F, sir. Okay, wow. So F you want 40. Okay. Next what you will select? D, 200. So D, 200. See, your total should be 500. Till now how much you have invested? 30 plus 50 plus 40 plus 200. 320 you have invested. Okay, wow. After D what you are having? After D you are having E. And E how much is the investment? 300. But you cannot make 300 as the investment, correct? 320 already made. If you are making 300, it becomes 620. Assume that projects are divisible. Projects are divisible, na? Half investment also you can make. Okay, projects are divisible. These are the assumptions. Now let's say that if my project is divisible. So if my project is divisible, na, I will not put completely 300. Okay, I will put whatever is the remaining amount. My remaining amount is 180, right? So I will put only 180 amount here. Correct? This much clarity. Okay, now see how much NPV it is giving. C is giving me 25 NPV. B is giving how much NPV? B is giving me 30 NPV. F is giving me how much NPV? F is giving me 20 NPV. D is giving me how much NPV? D is giving me 40 NPV. E is giving me how much NPV? E is giving me 50 NPV. But this 50 NPV you will get if you invest how much? If you invest 300 lakhs, correct? If you invest 300 lakhs. But how much you have invested? You have invested only 180 lakhs. Only the proportionate NPV only you will get. This point you guys are understanding. How many of you are understanding this point here? Okay, very important. This point, proportionate NPV. Okay, so now 50 divided by 300 into 180, it is becoming 30. So how much is the NPV that you are earning? 30 plus 40 plus 20 plus 30 plus 25, you are earning 145 NPV as compared to 90 NPV. Understanding? So your selection criteria should be in this way, that your NPV is maximum. So when your NPV will be maximum, your NPV will be maximum if you are selecting in the basis of the ranking of profitability index. Okay, va? So you should, selection criteria should be in the basis of profitability index. So note like you have to write in capital rationing decision, the selection criteria should be based on the ranking of profitability index. Yeah, now only by using profitability index you are getting the highest NPV. Correct? You should not select E and D. Yeah, now E and D is the ranking of NPV. A layman what he will think, pa, more profit na, first I will select that. No, profitability index you see, and then based on that only you have to do. Sir, what if my projects are not divisible? Next issue, right? Projects are divisible, you're doing like that, sir. If the project are not divisible, now how you have to do? If the projects are not divisible, now you have to now put options. Sir, first C, B, F, I will select, sir. Okay, va? And then D I will select. Okay, and then D I will select. How much is the investment and how much is the NPV? So only CFBD I am selecting. Now what is happening? My investment is 30 plus 50 plus 40 plus 200. My investment is only 320. Okay. Now what I am doing here is that instead of E, can I put A? Correct. Instead of E, what I will put? I will put A. Which means, sir, next rank is E only, na? But if I am putting A, if I am putting E, what is happening? It is reaching my investment threshold. So I am having a compromise in the ranking and then I am taking the next ranking A. This is one option. So A means how much now? More investment, 100. So 320 plus 100 becomes 420. Okay, this is one way. So only 420 investment. So how much is the NPV? So till D, which means 25 plus 30. Okay, 25 plus 30 plus 20 plus 40, and for A it is 10. So basically I am getting an NPV of 125. Next, what is the option is that C, B and F I will take. Okay, C, B and F I will take. Okay, now what I am doing here is that I will take E. Okay, C, B, F, E. So C means 30, B means 50, F means 40. Now instead of D I am taking E. E means how much? E means 300. Now I am having 420 again. Correct. C, B, F and E. So which means I am making a compromise of that D order ranking and then I am making E. Why? Because I want to earn more. Okay. Why? Because I want to. If had it been more, I would have gotten. So this 420 now, how much? C, B, F and E. So 25 plus 30 plus 20, CBF 20 plus how much is for E? For E it is 50. So again I am getting 125. Okay, again I am getting 125. So any of these options I can select. Okay, any of these options I can select. Suppose, okay, suppose if it was coming 400, then I can even come to A and then I could have invested complete 500 rupees and I would have gotten. It is more about utilization. Okay, it is more about utilization. Had this been 80, just take an example, had this been 80 and this becomes 90, so NPV is 10, no problem. Had this been 80 now, here A will be 80, right? So this will become 400, correct? This will become 400, NPV there is no change. But here I will take one more A. So this will become 500 and this 125 will become 135 and you will select this. Understanding? Sir, why now you are compromising the ranking to invest more amount? Because you are having 500, why to keep 100 rupees free? Now this 100 rupees free you can invest nowhere. Because the only option which is remaining is E and E wants 300. Correct? So 100 rupees you have to keep idle. This is option number 1 and this is option number 2. So like that you have to make permutation and combination and then you have to check if the projects are not divisible. If it is divisible, it becomes easy. But if it is not divisible, you have to make permutation and combination. And based on the permutation and combination, wherever the NPV is higher, that you have to select. Okay, ba? Now my dear Chellakutis, how many of you are understanding capital rationing? Please respond. Are you all getting 100% clarity? Super. Okay. So this is one way. Okay, ba? This is one way. In capital rationing, we have discussed how to handle if the projects are divisible. We have discussed how to handle if the projects are not divisible. We have also saw why we should not take the, why we should not take NPV as the ranking and why we should take profitability index as the ranking. Now next, what will happen is that sometimes, okay, sometimes, so capital rationing for divisible and non-divisible projects. sometimes what will happen is that they will give us the concept of economies of scale. Economies of scale, which means what they will tell is that if project A and B are taken together like that, if project A and B are taken together, if A and B both you are taking, now one machine can be used for both. So 80 plus 50 is how much? 80 plus 50 is 130, but you will need only 120. Then investment is 120, like that. So basically because of economies of scale it is happening. Okay, or they will tell one more thing. If project F and G are taken together like that, if project F and G are taken together, then discounted cash inflow is, if F and G are taking, actually your discounted cash inflow is 125, but because of economies of scale your sale is 140, because both the project you are doing, this is complementary to that, this will increase this sale, this will increase this sale, so both together you are doing, your sales is actually boosting up. Individually you are doing, your sales is 125, so 60 here, 65 here, but together you are doing, it becomes 140. Understanding? Like that question will come. Now in that case what you have to do, in the permutation and combination, this investment led, this economies of scale adjustment you have to give. Clarity? So basically if A and B are taken together, here also A and B are taken together, here also A and B are taken together. Okay, so investment la, my investment will be little bit less. Okay, so instead of 130, okay, instead of 130 it will 120, so this becomes minus 20 basically. So if A and B are taken together na, inge I am getting an economies of scale. So A and B are taken together, so A and B ki investment I have to take separately 120, then 120, okay, 120 plus investment for C 30, investment for F 40 and investment for D 200, you will get 390. Correct, you will get 390 here. Clarity? So this 390 is nothing but because I am getting an economies of scale of 10 rupees. Correct, instead of 130, 120, so economies of scale benefit I am getting here. Now again if F and G are taken together, here see G is not taken, Ayyo, G is lost project. Actually I should have taken F and C, okay, or F and E together. Let me come it as F and E together. So here F and E are not together, so no economies of scale benefit in NPV. Okay, discounted cash inflows. So F and E are taken together, then discounted cash inflow is 140. So here F and E are together, so my discounted cash inflows, okay, my discounted cash inflows will be 140. So basically if F and E are taken together na, F and E, so here 350 plus 60 is equal to how much? 410. So instead 410, your discounted cash inflows will be 415 vechiko. So 40 rupees benefit you are getting, right? So here it will be added plus 40. So basically this becomes 175 and this will, and here your NPV will be, because one benefit you are getting, right? So 135. So 135, 175, 175 is better. Understanding the concept of economies of scale? Tell yes or no if you are understanding the concept of economies of scale. So if you have to see, if the projects are together, that adjustment alone you have to give. The savings you will get, right? That adjustment alone you have to give. Everyone respond? Super. Okay, super. Okay, so these are what is capital rationing problems. Okay, these are what. Now I want you to do, okay, I want you to do illustration 22 now. Illustration 22. X Limited has 20 lakh rupees allocated for capital budgeting purposes. The following proposals are available: A, B, C, D, E, F. This is initial cash outlay, this is total present value. Okay, so total present value. So from there you can calculate profitability index, discounted cash inflows divided by discounted cash outflows, and then basically you have to do the ranking, and based on the ranking you just have to, and here it's they are telling the projects are divisible. Okay, so which of the above investment should be taken? Everyone try this problem. I'm giving you 5 minutes of time. I want you to do this problem. Okay, now it is divisible. Okay, well, the projects are divisible. Okay, without seeing the answer. Okay, see this board only. Without seeing the answer, I've even given you the structure, and then you give me the answer. Answer, I want the options and the NPV. That is what is the answer that I want. Okay, well, 5 minutes of time I'm giving you. Okay, so I'm seeing that the answers that you're getting is project CAED, with an NPV of 5,24,000. Promise me that you have not seen the answer. Say promise. Promise that you have not seen the answer. You did it by yourself. Very good, Pa. Very good. So let us check. The answer is 5,24,000 exactly. Very good, Pa. Okay, Pa. Very good. Can we have a round of applause? Can we have a clap for yourself, everyone? We have to appreciate whenever we are doing something good. Super. You guys are becoming happy that yes, sir, we are solving problems on our own. Very good, Pa. Okay. Super. So these are the capital rationing problems. Is there any capital rationing problem here in the workbook? Okay, I have not given. Okay, fine. Now illustration 22. Now let us come to normal questions of NPV. Okay, the social cost benefit analysis is nothing but here you will all get the normal questions and all. Okay. See, this is one replacement decision problem. Okay, illustration number 2 is question number 2 is replacement decision problem. Let us solve this problem, okay, together. I always say that the reading the problem is more important than solving the problem. Okay, so let's be ready. Everyone ready? Say yes, no, yes. Super. Now 9 gems, okay, 9 gems has just installed machine R at a cost of 2 lakh rupees. So just installed R at 2 lakh rupees. The machine has a 5-year life with no residual value. Okay, or no residual value. The annual volume of production is estimated at 1,50,000 units, which can be sold at 6 rupees per unit. Okay, so my sales is equal to 1,50,000 into 6. How much? 9 lakh rupees. Okay, so 9 lakh rupees is my sales. Annual operating costs are estimated as 2 lakh excluding depreciation. So 2 lakh rupees is my cost. Okay, excluding depreciation. At this output level, fixed costs are estimated at rupees 3 per unit for the same level of production. Okay, so fixed cost is how much? 1,50,000 units into 3. So this is becoming 4.5 lakh rupees is my fixed cost. 9 gems limited has just come across another model called Machine S. So one more model is there capable of giving the same output. Same output it will give, but at an annual operating cost of 1,80,000 rupees. Okay, ba? So currently what is my annual operating cost? 2 lakh. So there is a savings of 20,000 rupees. There will be no change in fixed cost. Capital cost of this machine is 2,50,000. So now capital cost is 2,50,000, which means just now I installed R. Okay, but he saw that after installing R, he saw that there is one more machine, but that is 2,50,000 rupees. But if I install that machine, my cost will not be 1,50,000. So my cost will not be 2 lakhs. My cost will be 1,80,000. So there is a savings in 20,000 cost. So now you have to see whether I have to make that 50,000 extra investment to have that savings of 20,000. And the estimated life is for 5 years with nil residual value. So here also nil residual value, same estimated life for 5 years. The company has an offer for sale of machine R. Ipo or offer machine R I will purchase at 1 lakh rupees. 2 lakh rupees just now I purchased. But what he is telling that, sir, no sir, now I have an offer for sale of machine R which is 1 lakh rupees, but the cost of dismantling and removing will be amounting to 30,000 rupees. So if at all I want to sell this machine for 1 lakh, I have to incur 30,000 extra. So net I will receive only 70,000. 1 lakh I will get from the sale of the machine. 30,000 I have to spend for dismantling. So 70,000 is the net value that I am going to get. As the company has not yet commenced operation, it wants to sell machine R and purchase machine S. So he made a mistake of purchasing machine R. Now what he is telling, now I will purchase machine S and then I will sell machine R. Now 9 Gems will be a zero tax company for 7 years. So there is no tax. Okay, no tax and allowances available. So no tax means you have to understand first no depreciation calculation you have to make. Correct? No depreciation and tax impact. Correct? Because there is no tax. So depreciation you should not minus. Understanding? And also no capital gain taxes. Okay, no capital gain taxes because tax is not there. So these two adjustment itself was not there. So now this question is very simple. First, advise whether the company should be opt for replacement or not. Sir, first one, okay, always in replacement decision problem, you have to solve it in a structure. Initial cash flow. Sir, first what you will do? First you will sell. Sale of old machine. Which is my old machine? My old machine is machine R. So sale of old machine R. Sir, how much I will get by selling the old machine R? I will get by selling 1 lakh rupees. Now when I am selling, okay, when I am selling, am I having any tax impact? No. First sale. Next what? Dismantling cost. Now dismantling cost is how much? 30,000 rupees. So I will have to reduce it from here. Correct? So dismantling cost 30,000. Okay. 30,000. So which means this 1 lakh I have considered. This 30,000 I have considered. Now what will happen after selling? I have to purchase now. Correct? Now I have to purchase. So now purchase of new machine, yes. Correct? I have to purchase the new machine. Now what is the purchase cost? 2,50,000 rupees. Okay, what? 2,50,000 rupees. Clarity? That's it. Sir, this depreciation I should not do anything. Okay, what? Depreciation I should not calculate. Had tax rate been given, then I should have calculated depreciation. That incremental depreciation I will put. Okay, had a tax rate been given, but no tax rate, nothing is given. So no depreciation calculation. Also, sir, fixed cost is same in both the cases. So I should do nothing. Correct? Okay. So now in initial cash flow, nothing else will come. These are no working capital, nothing is there. So which means 1 lakh minus 30,000 minus 2,50,000. So negative 1,80,000. So which means the extra amount that will go from my pocket is 1,80,000 rupees. Now what is my annual cash flows? Everyone understand what is my annual cash flows? The only annual cash flows is the savings in operating cost. Correct? Is my savings in operations cost. How much I'm saving every year? 20,000. So this is for how many years? 5 years life, correct? So from 1 to 5 I am saving 20,000 rupees. Okay, 1 to 5 I am saving 20,000 rupees. So this also I have taken 2,50,000. And how it is 20,000? 2 lakh minus 1,80,000. Okay, ba? So 2 lakh minus 1,80,000 rupees. Okay, ba? So this is nothing but 2 lakh minus 1,80,000 rupees. So this is what is my annual cash flows, which is 20,000. Now, sir, next one is terminal cash flows. Okay, this is year 0, this is year 1 to 5, and this is year 5. Now, sir, terminal cash flow, if you see, what is the scrap value for machine? Yes, is it given? Nil residual value. So nothing you will get, and also there was also no residual value for machine R. So terminal cash flow, nothing is there. Okay, wow. So no terminal cash flow. Okay, no terminal cash flow. Now I just have to calculate the NPV. Sir, how I will calculate the NPV? Year, cash flow, present value, annuity factor I can take. Okay, present, all the same cash flows. So present value, annuity factor at what rate? At 15%. And then discounted cash flow. Year 0, what I should do? Year 0, 1,80,000. Okay, this is initial cash flow. Annual cash flow 1 to 5 years. 1 to 5 years, what is my savings? My savings is 20,000. So this becomes 1. So 1,80,000. Sir, now this 20,000, what I should do? Present value annuity factor means I have to add all this. Okay, I have to add all this. 0.8696 plus 0.7561 plus 0.6575 plus 0.5717 plus 0.4972. How much I'm getting? 3.3511. Okay, so 3.3511 into 20,000, if I do, I am getting 67,022. So what is my NPV? My NPV is negative 1,12,978. Highly you should not, okay, you should not replace. So if you see this answer here, you will get negative 1,12,954. Negative 1,12,954. Here it is 978. Okay. So net cash outflow is 1,80,000, right? Yes, net cash outflow is 1,80,000, and then here net cash flow is 20,000. Okay, so 20,000 into all the 5 years, if you will get 67,000. So 1,80,000 minus 1,12,954. The same thing you're getting here, 1,12,970. This is what is the NPV. See, in your study material, there is no structure. Okay, there is no structure in which the problem is solved, but we have a structure here. So since NPV is negative, okay, NPV of replacement is negative, the replacement is not advised if the company is the decision to be made. Now if you see, this first question is over, replacement decision negative. So what is the decision? Since NPV of replacement is negative, it is not advisable to replace machine S with machine R. Okay, wow. So this is what is the question. Okay, this is what is the question. Now if you see the read the, will there be any change in a view if machine R has not been installed, but the company is in the process of selection one of the two? I have not installed R. Because of installation, I made 2 losses. What is one loss? 2 lakh of machine I'm selling for 1 lakh. So here itself I'm making a loss, correct? Here itself I am making a loss. Second one, dismantling, this is a loss, correct? Because of these two laws only I'm getting NPV negative. Are you understanding this? Okay, 2 lakhs of machine I'm selling it for 1 lakh. 1 lakh loss here itself gone. Next, dismantling cost is 30,000. This is also a loss because I've invested. Okay, so these two loss, because of these two loss only my NPV. Now if it has not been selected, then what I have to do, I have to calculate two separate NPVs. Okay, I have to calculate two separate NPVs. So which means what I have to do, I have to calculate initial cash flow for machine R separately, for machine S separately. So what is the initial cash flow for machine R? 2 lakhs. For machine S, 2 lakh 50,000. That's it. What is my annual cash flows? Okay, what is my annual cash flows? Now you see for R and S. Now annual cash flows, first sales. Okay, first sales. There is no impact in sales, but still, okay, but still, how much is my sales? 9 lakhs. So both the cases 9 lakhs. Okay, next, annual operating cost. What is my annual operating cost of R? My annual operating cost of R is 2 lakhs, but here it is 1,80,000. Okay, wow. So here it is 2 lakh and here it is 1,80,000 annual operating cost minus annual fixed costs. How much is my annual fixed costs? Fixed cost of 3 per unit, so 4.5 lakhs. Same output level, right? So 4.5 lakhs, 4,50,000, and here also 4,50,000. Should I have to reduce depreciation? No. Why? Because no taxes are given. So no taxes given. Now why should I reduce depreciation and again add back? So directly I will put it here. Okay, but this is my annual cash flows. 9 lakh minus 2 lakh minus 4,50,000. So this becomes 2,50,000, and here 20,000 benefit. I know the answer is 2,70,000. So 9 lakh minus 1,80,000 minus 4,50,000. So the answer is 2,70,000. Okay, and no terminal cash flows. I don't have any terminal cash flows here. So now I have to calculate the NPV. Okay, I have to calculate the NPV. Next one, NPV now how here? Cash flow for machine R, cash flow for machine S. Present value, annuity factor at the rate 15%, and then discounted cash flow for machine R and discounted cash flow for machine S. Sir, year 0, what is my initial cash flow? Year 0 na 2 lakh 2,50,000. Okay, so here 2 lakh and here 2,50,000. Sir, now what? 1 to 5 years. 1 to 5 years, what is my benefit here? 2,50,000. And here 2,70,000. Here this becomes 1 and 3.3511, correct? Okay, so what is my discounted cash flow here? Here it is 2 lakhs and here it is 2,50,000. Here 2,50,000 into 3.3511, how much I'm getting? 8,37,775. So what is my NPV? My NPV is 6,37,775. Okay, and here how much is my NPV? 2,70,000 into 0.3511. How much I'm getting? 2,70,000 into 3.3511. 9,04,000. Sorry, 9,04,797 minus 2,50,000. Okay, 9,04,797 minus 2,50,000. How much I'm getting? 6,54,797. Now if you see here, this NPV is higher, therefore machine S should be selected. Okay, here machine, here you should continue with machine R. Okay, and here machine S should be selected. Let's see the answer. 654,797. Yeah, 654,797. I think, okay, annual cash flow is 250, 270. Okay, cash outflow 2 lakh, 2,50,000. I think probably it is all because of the round off. So 638 and 655. Okay, 638 and 655. Probably some 400 500 rupees difference. It is all because of, sorry, yeah, it is all from 500 rupees difference and all because of some rounding off. So the answer is machinist should be selected. So this is how this problem, a replacement decision, it's a pretty simple and a pretty straightforward problem. If the examiner is a sadist person like me na, he will just put one more word here, tax is equal to 30 percentage. Now this word itself is enough. Okay, 3.3521 annuity rate. Okay, so 3.3521. So if you do this now, probably you will get the correct answer. Okay, fine. So now, had I put one more word here, tax is equal to 30 percentage, then what will happen now? Two adjustments will come in your picture. Okay, or two adjustment. Actually nil rate illana scrap value varadu. Scrap value adjustment will not come. Okay, scrap value adjustment will not come. But what adjustment will come here is that depreciation and tax adjustment will come. And adanala what will happen here? What will happen here in the annual cash flows? First you have to reduce the depreciation. Then this will be profit before tax. Then you have to reduce the taxes. Then this will be profit after tax. Then you have to add back the depreciation. That will be the cash flow after taxes. This is one adjustment you have to do, pa. Okay, this is one adjustment you have to do if it is a depreciation. And in this problem, what will happen now? After this, you have to reduce incremental depreciation. Sir, what is incremental depreciation? Old depreciation minus new depreciation. So which means in that incremental amount it is having, right? So which means 2 lakh and 2,50,000. So 2 lakh divided by 5. Okay, 2 lakh divided by 5. 40,000 is the depreciation and 2,50,000 divided by 5. 50,000 is the depreciation. That the extra 10,000 we have to minus here. Okay, well, minus incremental depreciation extra 10,000. Okay, and then profit before tax 10,000 and then minus tax 30 percentage, so 3,000. Okay, and then profit after tax 7,000 and then add back the depreciation 10,000 and then the cash flow after taxes 17,000. So instead of 20,000 this becomes 17,000. These two places the adjustment will come. I'm just giving you some injections. Okay, wow. Like what if tax rate is given, then how we have to handle. What if scrap value is given, how we have to handle. I'm just giving you some injections. Are you understanding? இதே WDB கொடுத்துறாங்கன்னா அவ்வளவுதான் சாவு. Okay, so you have to now prepare a depreciation schedule and then this becomes column wise. Okay, this becomes column wise 1 2 3 4 5 6. So all the sales will be same, all the depreciation will be minus, then you have to add back the depreciation and then you have to do the problem like this. How many of you are understanding what I am trying to tell, pa? Please respond. How many of you are understanding what I'm trying to tell? Please respond. Everyone, my dear Chalakutis. Super. Super, right? So someone is raising their hand. Are you having any question? Huh? If you're having a question, you can type it. Okay, so, or if you want me to repeat, you can write, sir, repeat. I will repeat it once again. Okay, so this is how the problem will be solved. Okay, question number 2. Okay, similarly, okay. Now let us try to do problem number 6. So take question number 6 now. Everyone take question number 6. Okay, let's do this. X Limited, an existing profit making company. Now you have to understand why this sentence is given. You have to understand the relevance of this sentence. They are not given just like that. Existing profit making company means, what is the meaning here? Now I will tell you one thing. Sometimes what will happen in annual cash flows, 1, 2, 3, 4, 5, right? At some places profit before tax, now this is 100, this is 200. At some places it could be a 50 loss. Now if you do minus tax at the rate 50%, here it will put 50, here you will put 100, here you will put 50, here you will put 25. What you will do here? If it is a loss now, what most of the people will do? Most of the people will write the tax as 0. But here you have to see what the question is telling. Here 3 cases are possible. First one, if it is an existing profit making company. If it is an existing profit making company means what? This loss will be adjusted in some other division. And this is one of the project. It's a profit making company. They're having hundreds of other projects. A lot of projects they're having. In all the other projects they're having a profit. So in one of the year, if they're making a loss now, this loss will be adjusted with some other project. So there they will be getting a benefit. So tax benefit will be there. Okay, then tax benefit will be there. Then what will happen? Profit before tax is 50 minus tax, like you have to add 25, and profit after tax will become 25 negative. Okay, this is one case. Second, what they will tell is that carry forward of loss is available. Second case, if existing profit making company word is not given, something we have to do with the loss, right? Then carry, they will tell that losses can be carried forward for next 2 years. And the money they will tell, okay, for losses can be carried forward for next 2 years. If like that they are telling, now what will happen? Then what you have to do is that this is year 3. Then year 3 and year 4. Now profit before tax negative 50. Okay, minus tax. So then you have to put tax 0. Why? Because this loss, you are not taking the benefit now, you are taking the benefit next year because it is carry forward. Now this 50 is carry forward for next year project, so this becomes 50. How? 100 minus 50. Understanding? So appadina 4th year I will get that benefit of that loss, because now I am not having profit from existing projects. I have to use it from the profit from this project only. So loss can be carried forward. This is a company, like, so then I will carry forward it. Then what will happen? Then I have to pay a tax of 25. So here this becomes negative 50 and here this becomes 25. Okay, here it becomes 25. So this is if carry forward of loss is available. If carry forward of loss is not available, which means loss gone. Carry forward of loss not available. If that is the case, then what will happen? 3rd year, profit before tax negative 50 minus tax 0, and then PAT is negative 50. That's it, close. Loss gone. Okay, I am not able to take the benefit. So 3 cases are available. Sir, how to know, sir, which case is applicable in my case? So if the wording is given existing profit making company, then you have to take tax benefit. Okay, then you have to take tax benefit. This one you have to apply. If they are not giving this sentence, and if carry forward of loss is available, and if they are telling now, then you have to take this, which means you have to carry forward it to the next year. Okay, you have to carry forward it to the next year. Okay, carry forward to next year. If they are telling carry forward not available, then you should not carry forward. If nothing is given, sir, nothing is given, then what I should do? Assume that you are having profits and you take this tax benefit method. Okay, so this is the default thing. If nothing is given, okay, how many of you are understanding this loss adjustment? Okay, this is one more adjustment called as loss adjustment. Please respond how many of you are understanding this. Okay, now using this, we are going to solve this. Existing profit making company is planning to produce a new product with a projected life of 8 years. Initial equipment is 120 lakhs and additional equipment costing will be 10 lakhs that will be needed at the beginning of the third year. So beginning of third year means year 2 oda end la vaangura. Beginning of third year means end of year 2. I have already told you. Okay, so which means you are purchasing this in year 2. So in year 2 you are purchasing one more machine of 10 lakh rupees. So 2 outflows here. Okay, one outflow in year 0 and one outflow in year 2. At the end of 8 years, the original equipment will have a resale value equivalent to the cost of removal. So whatever is the cost of removal, that is what is the resale value, which means nothing, I will get 0. Whatever I am getting, that I am going for removal. But the additional equipment will be sold for 1 lakh rupees. So 2 machines are there, right? So 2 resale value. Working capital of 15 lakh will be needed and 100% capacity is 4 lakhs. 100% is 4 lakh. First year I am running only 20%. So first year I am selling 4 lakh into 20%, 80,000 units first year I am selling. Okay. Second year I am selling how much? 30%. Okay. So 40,000 into 30%. So which means 1 lakh 20,000 units I am selling. Next 4 lakh into 75%. 3, 4, 5. These 3 years I am selling 3 lakh units. Then it is a downfall, correct? So then I will be selling 2 lakh units. Why these units are given? To calculate sales, variable cost and everything. But the production and sales volume are accepted. Okay. Sale price 100. PV ratio 60%. So PV ratio 60 means directly contribution you can take or minus variable cost 40. Okay. Whatever you can take. So 100 sales into PV ratio contribution. So contribution minus fixed cost is becoming your EBIT or whatever it is. Then expenditure, some advertisement expenditure is spending, that also you minus. 40% tax, straight line method of depreciation, so minus, and tax, and 15% after tax cost of capital. Okay, what is the tax rate? Not given, but they are giving 40% tax rate is given. Okay, 40% tax rate is given. Okay, so now I want you to solve this problem. The only one good point there in the problem is that you are having 2 machinery, so you have to calculate 2 depreciation. Okay, so 1 depreciation for first machine. Okay, depreciation for first machine 120 lakhs, right? And what is the salvage value? It is not given. Not given. So 120 divided by 8. What is 120 by 8? 120 by 8 is 15 lakhs. Okay, wow. So 15 lakh every year. This is the depreciation for 1 to 8 years. Now the second depreciation is there, right? That machine that you're purchasing for 10 lakhs. This you have to do depreciation for 5 years. Sorry, 6 years. Correct? Yeah, you're purchasing in year 2. So 3, 4, 5, 6, 7, 8. 6 years depreciation. Correct? So which means 10 divided by 6 is how much? 1.67 lakhs. And this depreciation will start from third year. Okay, what? Third to 8 year. 3, 4, 5, 6, 7, 8. If you see here, from third, this depreciation will come. Okay, well, so 2 depreciation will be there. 3, 4, 5, 6, 7, 8. Sorry. 10 lakh minus 1 lakh also you have to do, right? Really sorry. Okay, well, 9 by 6 is how much? 1.5. So 1.5 lakhs. So if you see here 15 lakh, 15 lakh. First year and second year 15 lakh depreciation. From third year 2 depreciation will come. 16.5 and 16.5. Okay. So I want you to solve this problem. It's a very easy problem. Okay. I want you to solve this problem and then we will discuss this problem. Are you all with me? Say yes, no. Yes, we will do. Yes, say. Everyone. Super. Okay, so please try solving this problem. Try solving this problem. Okay, just try solving this problem. I will give you 5 minutes of, sorry, not 5 minutes. For this you will need at least 10 minutes of time. So give me the NPV. So let me know what is the NPV. Type yes if you're still doing the problem. Type yes if you're still doing the problem. Even recorded students, I want you to solve this. Some hard work is required. So only 2 people are solving. Only 2 yes I got. What about others? My dear students, please type what is the NPV that you have calculated. Raise your hands if you're doing the problem. So I will get to know how many of you are doing. Raise your hands if you're doing the problem. In Zoom, there is an option of raise hands. So raise your hands. Only one person is doing a. Keep your hands raised only, pa. Waiting. So I got one answer in the chat box, and the answer is 1 crore 40 lakhs 97,362. This is one answer that I got. Any other answers? See here, if you see in the first year there is a loss. So loss now I will get a benefit. Okay, so 13 into 40% I have to add. So this becomes 5.2. So minus 13, this becomes negative 7.8 plus 15, this becomes 7.2. Correct? 7.2. Adhe mari I have to do others. 30.6. 99 and 66.6. Other answers, I will not check whether it is correct or wrong. You have to first give me all the answers. See, I have solved initial cash flow, I have solved annual cash flow. Now let me come to terminal cash flow. In the terminal cash flow, first I will be having scrap value of that old machine, right? New machine, 1 lakh. So that is what is 1 lakh. Then recovery of working capital is how much? 15. So I think 16 is the terminal cash flow. SLM method, so no tax impact. So 16 is the terminal. Got it. So this much is done. Terminal cash flow, scrap value is receipt, right? So that is 1 lakh. Recovery of working capital is 15 lakhs. So now calculation of NPV. Calculation of NPV. So year cash flow present value factor at what rate? At 15 percentage, and then discounted cash flow. See, first year 0. My initial cash flow is 135. And always remember, you should not forget that we have purchased a machinery in the middle. Scrap cost is cost of removal, illiye? That is 0 pa, okay va? The scrap value for machine A is 0, but scrap value for the additional machine is 1 lakh, right? The original equipment will have a resale value equivalent to cost of removal. So it means the net scrap value is 0. So let us say my scrap is 1 lakh, cost of removal is also 1 lakh. So machine A, it is 0, nothing. But additional equipment can be sold for 1 lakh. So this is for additional equipment. Okay, this scrap is for additional equipment. Right, this will be sold, right? So this becomes 60. So 0th year 135. And you should not forget that at the end of second year, you have purchased one more machine for how much lakhs? 10 lakh rupees. This you should not forget. Okay, this 10 lakh, lot of people will forget. So this you will be purchasing. Now what you have to do here is that second year, one more outflow will come for 10 lakhs. This lot of people will forget. Then you have to put 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. So what is 17.2? What is 230.6? What is 3, 4, 5, 99, 99, 99, and 6, 7, 8 is 66.6. So 66.6, 66.6, and then 66.6. And 8th one again, terminal cash flow. So how much is 8th one terminal cash flow? It is 16. Okay, so now present value factor at the rate 15%. 1 divided by 1.15. It is 1. So first year lende pandra. Okay, was 0.87. I am taking only 2 digits for now. Here 0.76, and again second year, right? So 0.76. Third year 0.66. Fourth year 0.57. Fifth year 0.497. Next year 0.43. Next year 0.36. Next year 0.33. Lot of people will again do a mistake. Again they will press equal to and they will put 9th year, but actually this is 8th year only. So 0.33. Okay, always double check once again. Always present value factor, always double check. First year 0.87. Second, third, fourth, fifth, sixth, seventh, eighth. Okay, and then you multiply. What is the answer, my dear Chalakutis? I have started after you and I'm in the finishing stage now. So I am getting 187.065 as the NPV. 187.065. In your study material, I think two mistakes are there. Okay, this 7.2, 30.6, 99, 99, 99, 66, 66, 66. Everything is okay. This 15 lakh 8th year is also okay. But this should be positive 1 lakh. Okay, this is a mistake. And also second year they forgot. Second year we are purchasing one more machine for 1 lakh, right? That they have forgot. That second year 1 lakh they have forgot. Okay, two things they forgot. 1.379. I'm getting 1.87. Is there any mistake? This is not additional equipment. Additional equipment we purchased in the second year. You are telling they have considered in the last. See, what is the discounting rate they have applied? This is the 8th year discounting rate. Why should we apply 8th year discounting rate for 1 lakh rupees? Second year only we are purchasing, right? Additional equipment. Understanding? Huh? So it should be minusing from the second year. It should minus here. That 10 lakh rupees additional equipment is there now. It should minus here. Understanding? Huh? Something you respond, pa. Only then I will get to know that yes, I am doing something correct. Okay, I think there is some mistake. 99 into 0.497 is 49.203. I don't know why this is 98. Calculation mistake only, pa. 49.203. I think all others are correct. Oh, okay. Yes. So only one mistake here, pa. Okay, pa. Sorry. I didn't see this. Okay, so additional investment they are reducing here, but this 1 lakh should be positive. This is one mistake, pa. In my eyes, it is a mistake. This should be positive 1 lakhs. Okay, so what is my answer now? 6.264 plus 23.256 plus 65.34 plus 56.43 plus 49.203 plus 28.638 plus 23.976 plus 21.78 plus 5.28 minus 135 and minus 7.6. So the answer is 137.765. Okay, 137.765. How much they are getting? 137.93 they are getting. Actually, the difference is this 32,690 they have reduced. So this they have to add. Okay, ba? So which means 32,690 into 2, if I do na 65, 380. So which means they have to add 0.6583. Okay, ba? So 6.26, everything else is correct. 6.26, 23.256. 23.13, 23.13.76. Okay, everyone, what answer that you are getting? What is the correct answer if you have taken 4 digits fully? So probably mine is because of 2 digits. If you have taken 4 digits, what is the answer that you are getting? Okay, you correct this mistake. Okay, eighth one should be 16 and not 15. They have taken 14. That is one mistake. Are you all with me? Online students, are you all understanding this point? Illa, you are having some justification. No, sir, it should be minus 1 lakh. Please respond. Online students, can I have some response? Yes, no. Are you listening to me? So I'm getting one answer, 138.59. 138.59. Okay, 4 digit. 23.138 for second year. Huh? Okay. The only difference is that actually 1 divided by 1.15, I have taken 0.756 or no. So that is the reason. It is all because of 2 digits. Okay, not an issue. So 30.6 panna 23.14 vandrum. Okay, so no problem. But what is the answer that you're getting? 138.59. Everyone is getting this answer, 138.59. This is the 4 digit answer. How many of you are getting? Please write 4 digit answer, 138.59. This should be the answer. Or if at all I want full na, 1 crore 38 lakhs 85,000, a 1 crore 38 lakh 58,834. 58,000. Okay, 834. Is this NPV is correct? Please let me know. Is this NPV correct? Others? Okay, it is an important problem. 2 points are tested here, pa. The first point is that because we are having two equipments, one is purchased in the middle of the year, so depreciation should be calculated accordingly. Okay, well, this is one good point. And second one, because my outflow is happening in the middle of the year, lot of people will forget this second year outflow. So this also you have to consider. These are the 2 points. All others are same only. Okay, nothing great we have discussed here. All others are same only. Are you all with me, my dear Chalakutis? Please respond. Everyone just respond. If you are with me, respond. If you have not completed the problem, stop doing the problem and respond. Okay, very good. Okay, so if you have not completed the problem, probably you can try it again, okay, with full numbers, and then you can take 4 digits and you will get this answer. So in your study material, there is a small mistake. It should be positive. Okay, it should be positive. They have taken it as negative. Okay, it is a small silly mistake. Otherwise, everything is correct. Okay, otherwise everything is correct. So this is one problem that we have did. Okay. Now, before coming to tomorrow's class, I want to give you one homework. Okay, I want to give you one homework. Question number 3 is your homework, and then question number 4 is your homework. Now everyone, these 2 problems only I am giving you as homework. Note it down that first solve without seeing the answer. Trust me, first solve without seeing the answer. 90% you will be wrong. Or if you know properly, okay, if you know properly, you will do it correctly. If you're doing correctly, it is very happy. Okay, give yourself a gift. Okay, pat your back. Okay, shout, yes, I did it. So this first you do the problem. If you're getting the correct answer, nothing great. Okay, nothing great like that. But if you're not getting the correct answer, but I don't want you to see the answer. Okay, first complete it. You do whatever mistakes you want. After completing, check where the mistake you did, and then you correct that mistake, and then you get at the correct answer. You know, mistake is the only thing that will help you learn in this subject. Okay, you make mistakes, you will learn. You are not making mistake, you are always seeing the answer during the problem, you will never learn anything. Take it from me. In the first class, okay, from the first class only I am telling that you do mistakes. Only if you do mistakes, you will be able to learn the subject. If you are not making mistake, you are like, no, I will see the answer, only then I will do. Definitely, okay, but this will not help you in the learning. Are you all with me? Say yes, no. Super. Okay, so these are the 2 problems, question number 3 and question number 4. Okay, see, in your study material there could be some mistakes. Okay, so you cannot trust your study material. Prima facie you cannot trust. Okay, I will tell you where and all what mistakes are being made, but you have to do the problem. And then in the tomorrow's class, I will ask you, okay, what is the NPV of the question number 3 and what is the NPV of question number 4. You keep the NPV ready. Okay, here discounting rate is given, so use this discounting rate only. Okay, so you keep your NPV ready, so that, and here also discounting rate is given. Okay, so keep the NPV ready, and then we will be continuing it tomorrow. So tomorrow will be a Sunday, okay, a weekend session. It will be a great session tomorrow. So see you all tomorrow with the same excitement level. Thank you very much. I hope you have enjoyed today's session. See you all tomorrow, and then we will be continuing with investment decision, my dear Chalakutis. Okay, see you tomorrow. Bye.